show. It is a wonderful morning on the 24th, and I'm joined by a better version. Ta-da!
Oh, he's not gonna. He's in the comments already. He's not gonna like that. He's not gonna like that.
I'm ribbing him this morning. And what a beautiful morning it is, Scotty.
It's better than it was an hour ago. That's for sure. Look at that. Brightening up. Fingers crossed.
Yes, it was fatal. I changed my coat this morning to my raincoat, and of course my pass and everything was in there. But it's all right. Producer Phil came in to rescue me, like
Absolutely.
the knight that he is.
As he always does, bailing us out on a daily basis.
Morning, Rich. How are you? Morning, Maturin. Sunny Thursday. You're in Valencia. Always probably sunnier there than here. Funky Gibbon as well. Parky and Kemi and Fried Tuck. Right. You are in for a treat, trader friends, because we've got Scotty on one of the coolest days of the week.
Good morning, everybody. Yeah, interesting times.
So many things happening overnight. Shall we go to overnight action? Because we had so much on. Let's do the coming up first.
Yeah, let's see what's on today.
All right, Scotty, drive us through it.
Right, you got Ange and I with overnight action until 8, then the opening bell, which should still be there. Hopefully it's still in one piece. Fast markets 8:15. Then Aaron and Martin with Under the Macroscope. See what they did there, very good. Angeline doing the all sessions at 9. Q&A with Ange and producer Phil. And then Decoding Crypto, episode 1. Now,
and there will be episode 2 tomorrow.
that will be an excellent way to wrap up the week as well, especially with what's been going on in Bitcoin after Crypto Week last week.
I know, right? Ethereum as well, moving very fast indeed, moving higher. Those of you wanting questions to be answered, please slam them here in the Ask and IG, or even better, hit the like and subscribe button and put them in the chat box over here so that Phil and I can get to it in the next few hours. Shirley Warwickshire, good morning to you as well. And Derek and Neil Brewster. Where are you, Monkey Man? Where are you away with the numbers? I have not seen you just yet.
He's obviously going through. He seems to like a little bit nearer the 8 a.m. open, doesn't he, Monkey Man? He seems to do his own prep.
Yeah, maybe he's still in his, he does yoga before the show in the morning. Right, so a very, very exciting power hour. S&P, my goodness me, rising 0.75%. Let's head straight to overnight action.
Here we go.
Here we go. So, very exciting night. How did you spend yours? I had half glass of wine to try and offset the excitement.
Yeah, I mean, certainly from being away last week, what was quite interesting was the market was starting to form a bit of the look of a struggle, where it was just failing to break out, and a few of the bears started creeping out again, saying this is negative price action, blow off top. But yesterday, with the trade deal with Japan, and then Bloomberg yesterday also piling in with a report that there might well be a trade deal signed with the EU, that gave it some proper impetus yesterday. Small caps again outperforming. Breadth actually picking up again. Last time I was on about a week and a half ago, Breadth actually had a bit of a drop, but that's starting to pick back up again. And with these new highs, money's getting forced back in.
It is. I love the market breadth. If you don't use it, I highly recommend you do, because it shows you where the action is in the day. And actually, I'm glad you brought up small caps, because even the short squeeze is being seen there, isn't it, Scotty?
Yeah, absolutely. Very much so.
Now, one of the key things as well that was interesting, obviously, was the fact that, S&P 500 closing at a new record high. This is the 12th close above previous records. NASDAQ also moved higher. Let's have a look at the Tech 100 there, because I was actually online with several trader friends who, you know who you are. So I know that you're watching the show in the morning. But what is interesting too is that they were all, as I was gearing up for Tesla, they were all trading and watching Alphabet.
Yes.
So this is the, I'm trying to get you to the hourly chart here now that it's obeying. So this is the US Tech 100. But also showing you, some of the big earnings. Let's start off with Tesla, shall we? Yeah, so Tesla I crunched some numbers this morning, and I'm going to bring it up for you right now. If I can, it was up earlier ago. If you come off my screen, I'll get the right one up. Here we are.
Yeah, okay, there we go.
Here we are, Tesla, right. So, you know, as you heard me saying in the show, you know, this is, well, to me, expected because, you know, the key challenges there were that the revamped Model Y has not brought on the revenue sales that was expected, right? And also those regulatory credits. I talked about this in my short. If you watched that yesterday on our YouTube channel under shorts, these regulatory credits, which was the magic thing that was helping Tesla, well, that's fallen away and has impacted revenues because the sales fell 51% due to that. Also, EV tax credits expiring as well did not help and will continue not helping. Main thing was that revenue miss, right? 22.5 billion versus the 22.7 billion expected. So what did you make of all that?
Well, I think the difficulty is the initial surge after he left the White House. That initial surge we saw in the share price was pretty short-lived after he then said, right, I'm going to launch my own political party. When we go to the newspapers actually shortly, there's a nice kind of headline in the Times that basically he's come out, yeah, there we go, look, ones of rough times for Tesla after the worst quarter in a decade. I mean, Musk is extremely clear. He's probably the most open of a lot of the CEOs, where sometimes he says stuff that seems to come straight off the top of his head, but he's been extremely clear. He's looking at transition, as we've talked before, about moving Tesla into other areas of business, you know, satellites, cybersecurity, power. So yeah, I think the more people realise it's not an auto company anymore, as they're starting to. But again, they were down 4% last night, closed at the low in the aftermarket. So expect more weakness for today.
And this is the
let's try and bring up a chart.
Yeah, this is the thing as well with Tesla, right? The whole talk is that Elon Musk is making rather a big bet that the robotaxi revenues, you know, once it all gets rolled out and everything, all the revenues from EVs installing, all that will be rolled into Optimus.
Yeah, so that's my chart for Tesla. You can see it's really ranging about that. I mean, if we're talking down 4%, that will take us back below 330 again. It's just a lot of the time. I mean, interesting. We saw GM were weak the day before yesterday on numbers, but then up 8% yesterday. So again, it's really tough to know exactly what they're going to do today. But I think probably that noise around the auto business and just that statement from Musk in the press today, that's probably going to be pretty negative for now.
Indications at the moment down 4.4%, trader friends. Down 4.4% is the indication at 7:38 this morning. Abby Fine, good morning to you. Thanks for the note on the results. Andrew McKilvey, Satsuma having raised more than £100 million for the Bitcoin AI strategy. We'll look at that as well. Monkey Man saying Tesla dropped because Elon says he's working on a new plan. Yoga and weights. He's on yoga and weights at the moment.
Yeah, exactly right. Just bringing up my chart for the close for Tesla last night. So there we go. That's the chart from TradingView. That's the price action. You can see the 9 o'clock here is where they closed at the high with the market, but then you see pretty sharp sell off into the bell. So yeah, looking down 4%. So expect them to open around 317, 318, something like that, where they went out last night.
I tell you what's indicated up though. Alphabet up, indicated up now at around 1.7%. Let's have a look at Alphabet. Bring up my slide for you.
Yeah, we've got that.
Okay, so we saw Alphabet's earnings Q2 EPS $2.31 versus $2.16 which was expected. So that beat the street people on the EPS front. Cloud revenues also strong with Alphabet. It's all about the cloud, isn't it? It's all about the data.
Yeah.
And also what was interesting, which I took from this, is it increased its capex spending. You hear Issa and I talk about this all the time. When are they going to, you know, at some point they're going to have to start easing off on that capex, right, spending. But at the moment, it seems to have not happened yet, right? Raised to 85 billion.
They're certainly doubling down. I mean, again, if we can go back to my chart, please, there's you can see the price action last night, that initial rip higher again. That's the US close, that huge candle there. Big early move higher, but then a proper tempering off into the bell. There hasn't been a lot of negative press overnight that I've seen about this spending, but as you say, they want to, like anything, for the AI arms race, you don't mind spending some money, but at some point you want to start seeing some more tangible returns. I did see a piece the other day saying there's some of the parts, when you take into account Waymo and so on, you're talking about $214 valuation, but at the minute, I think with where these names are, with the run that they've had, introducing more capex, they'll need to say a few more interesting things in the earnings call, I think.
Yeah, well, investors are going to start getting impatient, and they're going to want payback, right,
Yeah,
Scotty, as we know.
100%. Yeah, 100%.
Key upcoming events for Alphabet, take a look at and keep your eyes on the Gemini rollout. Also, legal proceedings like the antitrust case updates. It is also expected in the next 6 to 12 months to come up with new AI features and cloud services, because of course Alphabet has been accused of being too behind on getting ahead in the AI consumer user space. But I kind of think it's going to stay strong. It's going to put all its efforts into that sort of data cloud side of things, because it knows it can't fight all that competition, right?
No. I mean, look, it's still such an incumbent brand. I mean, how many times do you say in conversation, if you don't know the answer, Google it?
Yeah.
But yeah, at some point you've got to start.
My husband has a T-shirt.
Really?
It says, ask my wife if she's not there, Google it.
There we go, see.
I've banned that shirt. I've hidden it somewhere in the house so you can't find it, because I dislike being asked, like Google.
Absolutely. I
Derek Wake's numbers look positive. Derek, man, a woman after my own heart. I like DIY hair. Andrew McKelvey, also ITV broadcasting, they're ahead of expectations. Nice.
Lovely.
Wiz flying in turbulent times with engine problems. Andrew McKelvey, you should be on the show. This is amazing. The number of puns coming here, thick and fast.
Pun Factory.
Pun Factory. Poppy, loving the podcast. I watched it yesterday when it went out on our airwaves. Poppy, doing my homework, wanted some inspiration. So, good morning to you. How is your dog doing? So, Poppy's it's named that mantle is actually the name of his dog.
I see. That's very good.
Right. Some of the other big ones, obviously, that just to get you across as well, some of the overnight headlines. We, of course, have Trump escalating his criticism of the Fed. This time round, Commerce Secretary Lutnick saying Powell's got to go. Trump to visit the Fed today.
Yeah, I don't know if he's inspecting how much more work they've got done. Maybe he's looking at the bathrooms to see if they've had any new taps fitted or whatever. But
the palace.
Anyway, we'll see. I'm sure there'll be a few more quotes coming out of that a little bit later. But yeah, if we go to the Times, as we can see on the screen there, as we were talking about Musk, rough times ahead for Tesla. I mean, again, what a candid statement to make for a CEO. But again, as we were talking, you could see that little sub-headline there. The billionaire said the company was in a weird transition period. Again, you don't normally hear CEOs using that kind of language, but that's all interesting stuff. So yeah, further continued weakness there. More plans are going to get weighted. All that noise around the political stuff as well is probably faded a little bit as well. Maybe that helps. Then the Google we were talking about. Interesting seeing the pound has now started to tail off again with the negative news around the government and the borrowing and the economy. Then we've got David Solomon saying that the city's status is at risk. You can see here the Goldman Sachs boss. Again, they generally never do anything. You can see they're having a nice little stroll with Rachel Reeves. I'm sure I'd love to be a fly on the wall with that conversation. But yeah, I mean, look, he will only do what's best for Goldman Sachs, obviously, but that first headline there, the article, London's position as a global financial centre is fragile, et cetera, et cetera.
And you're right. You're totally right. Goldman Sachs tend to almost never give interviews, right? So this is a real sort of red flag. I saw that yesterday as well. And in the industry, they're known as Goldman No.
Okay.
Right? In the broadcast media industry, known as Goldman No, because they'll say no straight away. And then Merrill Lynch. You haven't worked for Merrill Lynch, have you?
No.
Any Merrill Lynches out there? Is known as Merrill Lunch. So they'll say, yeah, I'd love to talk or do an interview, but I'm off to lunch.
Oh, lovely.
So they were known as Merrill Lunch.
Lovely. Nice work if you can get it.
Won't say anything about Credit Suisse. Rich might be listening in. Taking a look at gold as well, trader friends. There was an interesting article about why gold may be in a new paradigm shift as a yellow metal soars in 2025. Now, this story notes research from Data Trek, and it's about how gold has outperformed the S&P 500 over the last 20 years by a wide margin. This is according to Data Trek, with the yellow metal returning 616% over that period, whilst the S&P 500 gained 421%. So we have had Simon Popple, trader friends, as you know, here talking about gold, comparing, how it is now potentially he says, for those that don't think it's going to climb higher. He says that with all the inflation worries, he's got this amazing acronym that basically binds inflation, uncertainty, right? And he says this is now a new bull cycle. We're only at the start.
Well, again, with the increase in the deficit, I mean, again, you could see stocks moving a lot higher just because as they increase the deficit again with the big, beautiful bill. But yeah, if you're talking about in real terms with the destruction of money, then you certainly want a bit of gold in your portfolio at the very least.
And I am increasing my exposure. And this is the thing, trader friends, that we talk about here, understanding trends and filtering out the noise. So my humble opinion is, Trump is making a huge gamble, along with other governments, because they can't not drink the Kool-Aid if someone's drinking the Kool-Aid. And they're basically, stealing from the future and hoping that their bet for growth is paid off, but in the process, destroying value in fiat currencies. By default.
Yeah, absolutely. I think it's becoming more accepted now that you need a bit of Bitcoin and gold. No matter what you think of Bitcoin, you definitely need
This is not investment experience. Investment advice. Yes.
However, if you do like the interaction, please like and subscribe.
Please like and subscribe.
Because it costs nothing, even though it's not.
Scotch is very good.
Even though it's not investment advice.
It's really good.
It's freaking entertaining. So,
it's freaking
let's get onto that.
And nowhere do you get freaking entertaining.
Absolutely. So yeah. Yes, Trump getting rid of the Federal Reserve. I mean, again, you would just love to be a fly on the wall when he shows up. I can imagine Powell just saying, "Oh, I'm sorry, I can't," not to let him in. A bit like me last time I showed up here, and no one had heard of Scott Byrne on the reception, and I had to get a whole army of people down.
Phil's going, sorry.
But yeah. So again, I mean, look, first time in nearly 2 decades that an American president will be making an official trip to the central bank. I've seen 2 arguments here about where it's incredibly worrying if you get a puppet in who will just do what he says and to cut rates. But then I've seen other writers just saying it makes no difference because a lot of people are arguing that the Fed's complicit in what they're doing anyway with the government, allowing them to increase the deficit and so on and so forth. And the criticism of Powell about being too focused on jobs, letting inflation run out of control. It's a pretty messy situation. But that's going to be 4 p.m. Eastern time, so that's as the US market closes. So again, unlikely to get any headlines out between now and the actual trading session if you're going to trade the US. But again, I can imagine he'll stand outside and say something pretty negative. Interesting. I did see very little out of the Powell talk on Tuesday, which he gave. So again, that's I think at the moment potentially a nothing done, but let's just see.
Well, he's going to still remain sort of data, dependent, right, until we see more evidence, right, trader friends. But here is the thing. Here is the key. Powell knows that all this palace refurb talk, which is bordering on the ridiculous, is Trump trying to take attention away from some other thing that he's really worried about. And the reason why I'm pointing this out is, how do you trade this? How do you trade this or invest this, trader friends? And the reality is, no matter which way you cut it, it is whether it's to do with the big beautiful bill that Scotty's just touched on, whether it's to do with
big beautiful bill.
Thank you.
Thank you. Whether it's to do with what I mentioned about, what governments are doing and how that's affecting fiat currencies, Bitcoin, crypto, whatever. All this means is, looking at the US dollar basket here, we are continually going to see this downward pressure on the dollar going forward, at least in Trump's term. And also, I often get asked by trader friends, what are the key sort of black swan events, right? What could really derail stuff? So I'm not going to say what it is. I'm just going to allude to, for those of you who haven't yet, did you watch that Trump interview with Gary O'Donoghue, the BBC's chief North America correspondent?
No.
I'm sure all of you have seen what I mean, the Gary O'Donoghue. I'm sure you know he's partially cited, but do have a watch of that interview, because you'll then see what I mean. Come off my screen, because I'm going to bring you back to the dollar. I'm not going to say what happened there, but do have a watch. And also, you've probably seen the headlines that Trump is trying very hard to bury the whole Epstein list issue. So
Sure.
Have a further look into that. If you do your homework, like my aunt used to say, my very wise aunt, if you have someone that is hardworking enough and does their homework, you don't have to tell them the secret source. And you'll see that those are real black swan events. And what Trump will increasingly try and do is, if you see more noise about the White House, but the Powell's has come down, all that, that's kind of like him trying to take it away from the whole list situation.
Right, understood.
Yeah. Have a look at also indices, because this grind up situation. We had a poll yesterday that Phil put together, and those on the chat, and this is great, Scotty, this is what makes a market. Half were in the camp that we're going to see this grind up continue. You tell us which side of the fence you sit. The other half, like Rich and also Joachim from Liberum, say there's 10 to 15% correction in very soon, the next few weeks.
That's been a bit of a rolling view. I actually read something about this again the other day. There's been, I think, something like 7 hated rallies, or most hated rallies, since the start of the 2000s. And again, generally, if everyone owns it and gets euphoric, which they don't yet, so I don't see particular reasons to be fearful yet, because we've had that little hiatus in the S&P, another push higher. Generally, these things are something that you don't expect to happen. So there are known unknowns, which all the things we're worried about. The trade war, it seems to be receding. Mm-hmm. So I would have to be in the grind up territory at the moment, which again is not particularly something that I understand because of the negatives that we focus on. But I don't think you can really escape the grind higher at the moment. Certainly while earnings are there. We are getting to August again. We could even have a little segue into we're coming into August, not far away now, and August of last year, we did see a Japan-triggered bout of selling. And if we can just bring up my graph, we've got
Let's go to Scotty's chart.
That is the 30-year Japanese bond yield. which
Talk
we
us
were
through your
talking
colours. I love the fact that you've got yellow because I can see that very well because I've got
Yes.
astigmatism. But you chose blue.
Yeah, so apparently trading psychologists say that blue and yellow are less emotive than red and green.
Nice.
So they allow you to look at it more dispassionately. I still use red and green for my, yeah, absolutely, good, eh? I still use red and green for my moving averages, but yeah, Japanese 30-year yield, I mean, again, you saw the Nikkei up 4% on the trade deal. Automakers had a big jump, but that doesn't change the picture in Japan. So again, we're coming up to August, 1 year anniversary of the last sell-off. Maybe that's the thing that we should be watching just as a little measure, just to keep track of. Look at it a couple of times a week, I would suggest.
Yeah. And so that's your canary in the coal mine. Not just automakers actually in Japan, but also automakers here yesterday had a really good session too.
Absolutely, absolutely.
Porsche,
Now,
BMW.
it is that time of the day. I am yet to get anywhere close to guess the chart, but...
Oh, is it a tough
that's
one?
just-
Oh, is it UK or is it
Okay,
US?
it's UK, it's
Or
UK.
Phil, are you going to give us a South African one without knowing you've given us a South African?
Yeah,
Okay.
yeah. If the gallery is saying it's a tough one, I might as well not even try.
Go on.
Here it comes.
Hey, trader friends, here we are. We're back. 1 minute and less to the opening bell. Lots of good guesses there. It was THG.
Formerly the Hut Group. I guess that's what expansion gets you.
Yeah.
Yeah, I mean, incredible.
Oh my
Although I
goodness
still
me.
see plenty of parcels arrive at the Burn household from THG, so
Andrew McKilvey
I'm surprised they're that low.
guessing ASOS. Rich in his pajamas guessing Hornby.
Hornby, yes, that's right. Maybe he's got his train set out as we're talking with his conductor's hat.
Going on
Yeah,
upstairs. The studio said something that should not be repeated. You got the bell. You got a bell, Scotty.
Okay, yes, we're here.
2, 1, off we go. Here we are, and having a look across the European and the US, where after races looking like it is rather mixed there. Read us through the early moves, Scotty Byrne.
So where we got tech, unsurprisingly, Germany again just breaking out. I mean, it loved the trade deal news. I mean, if the EU gets a trade deal as well, that's just going to be another push. Yeah, the Dow just not loving Intel. Intel were down 5% after the bell, so that's why Dow futures just a bit down. S&P are just doing nothing because we've got a pretty decent reporting day today and a bit of data as well. FTSE up 2, France up. Yeah, I mean everyone's loving loving that move higher.
Yeah.
Hong Kong again leading 2 with the tech names coming back. K Hynix in Korea, who is the biggest supplier to Nvidia. Blowout numbers today as well, so tech across the Asia space looking really good. And yeah, that's the kind of pattern we would expect following on from yesterday's movements in the US.
Yeah, that's right. Also, it's the sort of moves we would expect after those, especially since we're midway through earnings season, right? So
Yes.
today is still a very busy day. Let's have a look at the FTSE first in terms of how they're shaking out there. Here we are. I hear in my ear Wizz Air is moving down. Thank you, Andrew McKilvey. But having a look at the winners there, we've got Melrose up, BT Group up 1.4%. That's after news that its Q1 adjusted EBITDA met estimates, but its CFO is to retire.
Rolls-Royce up again, yeah. Earnings on the 31st for Rolls-Royce.
So, Kate Murphy, I hope you still have Rolls-Royce there because good on you if you have. WPP up 1% as well. Vodafone, where is Vodafone? I hear.
Up half a
Rich
percent.
asked Vodafone.
Had numbers out today. Rich thought they were largely in. I did see Rich on the comments earlier. Putting in the work even though he's off. Yeah, in line. So yeah, Vodafone just inching a bit higher there. But yeah, you can see the market is definitely getting back into the more cyclical names, you know, Standards, Rolls-Royce,
Yeah.
WPP. Obviously, that's just been a basket case. But yeah, the more cyclical names are having the push higher, as you might think.
Yeah. Also, Taylor Wimpey up about 8% there. Just taking a look at the losers now. SSE, Rich, is down 2.5% there. Endeavour Mining is down more than 1% as well. I think one of you trader friends has Endeavour on your books. Scotty, rest of the readout, any pop at you?
Let's have a little look. Yeah, generally the more boring stuff. The safety utility plays are lagging. So yeah, we're back to being risk on by the looks of it. Getting repeated patterns.
Yeah, BP, no.
Let's have a little look at the autos.
BP is down 1/3%. Let's have a look at the autos, shall we? So having a look at Volkswagen first. Here we are.
Yeah.
Is up
That's
2% there. And also Porsche is also probably moving high as well, adding potentially to yesterday's. Yep, up 2%. Nicely adding to yesterday's whopping gains there after the news from out of Japan and the trade, right? Up.
Well, and if the car park in my hotel in Italy was anything to go by, obviously a lot of southern German holiday makers there, they've all got Porsches or BMWs. So yeah, certainly sales are doing pretty much okay there.
Yeah, and call out to those of you wanting to pick up a second-hand Macan 4, wait a couple more months, 6 months maybe, then we're going to have loads of that hitting the market. Let's have a look at Wizz. Is it whizzing lower? It is. Right, let's have a look at the 5-minute chart here, and it is, there we go, what a, oof, whoa. Those of you that I'm looking at this right now, it is moving lower since the open rapidly. It's down 9.8% there. Let's have a look at the news here. Wizz Air missing profit and delaying fleet return up to 2027. We knew that it is already struggling with plane groundings. This is because of issues with the Pratt & Whitney engines, RSACs. I know you've got a holding in RTX. And also, Wiz this is a terrible time to be doing this, right? Summer
Well,
season.
I mean, if you're looking at footfall through airports, I've flown 3 times this year, and it's like a soccer crowd. It's absolutely packed at any airport you go to. It is. It's yeah.
Yeah. So let's
Look
have
at
a
that rich flagging again. Look at this. Look at this.
Look
So
at
SSE's ex-div knocked down 2.5%. See the old
ex-div.
Thursday. Okay, Reckitt's has all extended auction. We'll take
yeah.
a look at that in a minute. We'll see if there's any news. Is there any news in
Across
that?
at Reckitt's, yeah, full year core like-for-like sales above 4%, and this was when it said it was expecting +3 to +4%.
Okay,
So
that's
it's at the
decent.
top end of its expectations. Some of the others too today out with numbers. Just checking in on Anglers, because I think Anglers was moving earlier on. I know Rich is long Anglers. Up 0.75% for you there, Rich. Q2 copper production numbers were out, but I believe they weren't out as much as expected, but they're still up 0.2%. Reckitt's and
Reckitt's
Cross.
is up and running.
Here we are. Whew. Reckitt there. There you go. It's roofing there. Reckitt up 10.5%.
Incredible.
Pretty decent there.
Absolutely
Reckitt,
incredible, yeah.
Like-for-like sales. It says this. It sees it above. This is for the core number, plus 4% when it initially had a lower range in the outlook as well. So it's
If we can maybe have a look at the Reckitt's news, see if there's anything else in there to flag, perhaps.
right. Let's have a look at. Okay, hold on. I couldn't hear you because Scotty's baritone was so impressive.
La la la.
Right, here we are. Reckitt Q2. I was talking about Reckitt's news earlier. The Q2 adjusted like-for-like net revenue growth of 1.9%.
A share buyback.
Yeah.
Everyone loves a share buyback.
Everyone loves a share buyback, except for one of our guests on the show, and I believe a trader friend who will not be named, says it should be banned because it doesn't show you doesn't reflect, how well the company is doing.
No, I mean, I've always thought about this strategically. A company should be having better ideas than just buying back shares. But if Goldman have got a dedicated share buyback desk, then that's not going away anytime soon.
Reckitt also saying that it delivered excellent growth in emerging markets and navigated challenging consumer environment in developed markets.
And nothing again about price hikes or impact of tariffs either.
No, it hasn't.
Which is interesting.
Yeah, and in fact, it said it thinks things are going to be better for its Mead Johnson Nutrition. Expects low to mid single digit like-for-like. Of course.
Right, let's have a look. I think ITV are on the move as well.
Yeah,
apparently.
ITV, here we are. Andrew McKelvey, you are hot. Andrew McKelvey there, up 4%. Let's have a look at the 5-minute chart there. And ITV, I think I did the readout earlier on, but let's have a look at the news site. ITV's half year coming in ahead of expectations. This is the half year on its advertising beat. Also, strong content demand from its studios business, helping its bottom line. ITV, of course, Britain's biggest free-to-air commercial broadcaster. I always find a sort of within several generations above me, this kind of gasp when you say, maybe there's nothing to watch. Let's maybe see what's on ITV. And this,
Yeah. Yeah.
So let's have a look.
Exactly. Who watches regular TV anymore?
Yeah, exactly. Who watches regular TV? Right.
BT.
Here we are. BT Group up 3.3% there.
Goodness me.
Up more than 3%. Big move there for BT. As I mentioned earlier, the Q1 adjusted EBIT meeting estimates. Let's see if there's any more of a readout there. I talked about the new changing of the guard there. So they've named Patricia Cobian as its first female CFO, and she's with Virgin Media O2.
That's interesting.
Yeah.
Very interesting.
She is coming to take the helm after Alison Kirkby, led BT This is amid the huge restructuring, the transformative plan that was put in place. There are a lot of people within BT itself saying that all those measures, the strategy just wasn't working. And so now they've brought a third person to try that strategy out.
Rich and I did discuss this actually a few weeks ago when I was on about them owning all the, effectively the hardware for all the faster broadband. Compared to when I last had BT in, I upgraded my Wi-Fi to a faster version. And I placed a call. Within 2 days, someone was there, they scoped it out, they scanned it. A week later, I had the cabling installed. So they're clearly just pushing that whole kind of supply chain around things like Wi-Fi, which is what people care about nowadays, and that provision to just being more efficient and better. So the less people that complain about little things like that. It's the same as Halfords, as Rich and I were talking. Last few times I've been in Halfords, absolutely brilliant. Staff are great, clued up. So yeah. If you do the simple things well.
Yep, and keep to, what core stuff that you're doing.
Correct, keep to your core business.
Keep to what you know. So, this is an interesting one because it is the third person, right? First, it was someone called Jansen, and then he came in with his transformative plan, and then that didn't work as well. Shareholders had liked. Then Alison Kirkby came in to try and move things along. That, according to people I know in BT, didn't quite work as well. So now they brought in Patricia Coben. Maybe third time lucky.
That is great knowledge. If you were on the chase about BT, you'd win the jackpot, because I didn't know any of that. So makes sense.
Let's have a look at
Shall we have a little swing to Europe as well? Oh, look at that for a chart. Yeah, breakout. Okay, let's have a little look at Lloyds Bank. Sleepy Lloyds Bank. Again, another one Rich and I were talking about. Sleepy, boring Lloyds Bank.
Having said that, sleepy and boring is good on the divvy front, A lot of people have this in funds because it's a dividend play. So here we are. There's Lloyds for you, and it's up almost 8% there. Let's have a look at the 5-minute for you to show you the move. There we are. It is reversing now, so just be aware.
Yeah, I wonder if there's anything that's created that. Is there anything in the headlines there, Andrew, on the news, perhaps?
Bill's trying to talk to me, but every time I'm talking, I can't hear him. Right.
Lloyd's
profits up 5%, even as the economic outlook dims. So this is, its profits, and it's beaten the street. Interestingly enough, the bank also says it will pay an interim ordinary dividend of 1.22 pence per share, 1.22 pence per share, equivalent to £731 million. That's up 15% on the prior.
It is interesting, right? So look, economic outlook dims, narratives poor. I mean, summer narratives are generally always poor anyway, just, economically. But it's funny, every time I go out, everywhere's busy. Airports are, as I said, soccer crowd. So I just wonder if everyone's just actually ignoring a lot of the headline negativity and the political stuff, and just actually carrying on with their lives. I don't know. But again, a lot of the forecasting, it's easier to forecast poorly and beat because you get paid on performance.
Yeah.
So if you say it's going to get great and then miss, then that's the double negative. So I mean, again, a company that's pretty much in every part of the UK economy, right? Small businesses.
Yeah.
The consumer lending, mortgages. Again, that's a strong graph.
Yeah, it is a strong graph. But also,
look at Europe. Shall we have a little look at Europe?
Just before we go to Europe, just want to say that it is a strong graph. However, lots and lots of people do hold these stocks for the dividend yield. And actually, Lloyds isn't in the top 10. I thought it was, but top 10 are names like Legal and General, NatWest, Unilever, Admiral Group. And very often you'll find that these companies may not come out with stellar earnings, right?
Yeah, no.
But they're still very, very well supported.
I think the yield on the FTSE is still, I think, pretty much the highest globally. I mean, S&P yields, 1.6%. I think FTSE you're getting 7%. But it's growth and momentum that's the drivers. So obviously S&P is grabbing all the headlines. But yeah, I mean, something like that, having a bit of money in the FTSE, get that divvies.
Right, we have a poll up, Trader friends. Opinion on buybacks. Scotty, read it out.
So what do we think about buyback? It's close to insider trading. We don't like them, 12% at the moment. Part of what makes a market, 65% is true. No strong opinion, again, that's in second place. Look, it is part of what makes a market. It's a case of understanding it. I can understand why people think that they don't like it because companies are paid to make better use of their capital.
Yeah.
But again, in the US, it's a big market driver. Seasonality of those. I mean, look at the market performance of the S&P when there's blackouts for buybacks versus when they're open again. You know, it's a core underpinning of what companies like to do.
Yeah. And also, for a lot of people, it's a core part of, how they construct, for example, their pension portfolio, right? And how they diversify their portfolio.
Yeah.
Interestingly enough, I have to hand, if my memory does not fail me, because producer Phil has given me he's coined a new term that I'll never forget, a single espresso. A single, because he said single.
He is multilingual.
He is multilingual instead of doppio. So BAE Systems and also I think Rolls-Royce, some of the companies that are looking to increase their buybacks.
Okay.
Right, we have to go to a quick break, but we'll be back soon with Fast Markets.
Okay guys, before I teach you how to use this, I have to teach you how to use this. The mind. The cash return wasn't all about speed, it wasn't always about power, it was about the mind. Become the bull. Visualize greatness. Okay, minds are ready. Time to go. Hey, come on, Pat. Come on. Cash returns, come on. Oi! Oh, you're not going to get better than cash returns.
Hello, I'm Axel Rudolph, Senior Technical Analyst at IG and Fellow of the Society of Technical Analysts with over 30 years experience in trading the financial markets. I've been following cryptocurrencies from the very beginning, and with IG's new crypto offering, I can finally share my technical analysis expertise on crypto with you. So join me every Wednesday morning for my new show, Charting Crypto, where I'll be answering your technical analysis questions on all things crypto, live on Trade Live with IG.
Bring me the next shiny new thing. Bring me the next shiny new thing.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced. Not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically, in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Ring-a-ding, trader friends, and we're back on Fast Markets, and it has been fast and furious indeed. Before we get to Andrew McKelvey and Cole Me Watson, Steve Davies, let's go through the results of the poll.
Final result, not a massive change on the poll by the looks of it. Yeah, 60% makes the market, so a little drop there. No strong opinion, 26%, and then close to insider trading, don't like. And thank you to the 30 people for voting as well.
Thank you very much
for taking the time.
People, no strong opinion, 26%. Surely you like a divvy, no? Only time will tell. Speaking of time will tell, Wizz Air, let's just have a quick look at that one because very quickly, then we'll move on to Germany and France, of course. Andrew McKelvey flying out of there.
Nerves of steel. What a
Nerves of
trade.
steel.
What a trade.
What
Well
a trade.
Well played.
And I hope you did it before the turn as well.
No doubt.
Yeah, no doubt.
Yeah, that's skills, proper skills there.
Let's have a look across to, let's go to Germany first, shall we? Yeah, because the autos are revving higher. Right, let me press it. Change for you, Scotty. Here we are.
Deutsche, look at that. The formerly in the doghouse for a long time, but yeah, Deutsche coming back despite the strength in the euro. Good set of earnings. If we can just have a little look at the chart there, Em, sorry.
Here we are.
Not behaving. There we go. Right. Yeah, look at that. Look at that. Yeah. That's a good strong move again. I mean, look at that. That's almost unbroken, isn't it, since there? But yeah, look, that's a proper move. So you can see a little bit of antipathy beforehand because you do get, especially in Europe, that euro strength and the translation into the bottom line does sometimes weigh on those stocks in Europe. So perhaps a bit more tentative. But yeah, really good across the board.
Yeah.
Great metrics.
Just having a look here to see whether my AI filter has given us any more reading on this. Deutsche, of course, the CFO coming out saying reasonable chance to make 32 billion euro revenues, even with foreign exchange headwinds. So it looks like investors loving that as well. And we're now seeing it climb to levels not seen since 2015. Whew. It is really, really going gung-ho there. Let's have a look elsewhere too, because we talked about the autos. Let's see if that has revved higher. Volkswagen up almost 2% there. And also Benzi, as the Chinese call it, Mercedes-Benz, up 1.3%. And we checked on a Porsche earlier on. That was also higher. There we are.
I mean, look at all those. Apart from Deutsche Tell, that's just all cyclical again, isn't it?
Yeah.
Porsche, BASF, Siemens, Healthineers, Continental.
It just feels, Scotty, that no matter where you look, risk is back on again.
Yeah, that's right.
Yeah.
Things. I mean, if you see the Continental share price, like in all tyre stocks, tread carefully. But it can be, again, I mean, look, that's just a great setup for as regards what's moving and why.
Continental, there you go. We're also just taking a look at what's filtering through right now. We're also seeing a lot of this trade deal hopes buoying what is happening over in France. Let's cross over to the France 40 as well. Here is the winners list. We did see a bit of profit taking earlier on in the week for the defense names, but you know what? Here we are. They are back, risk on again. We're seeing across the board, not just in France, but also in Germany. You saw my chart earlier, Rheinmetall. Banks as well, doing
Yeah, loving those Deutsche numbers, aren't they? I mean,
Yeah.
that's a pretty, I mean, a lot of the banks across Europe do have pretty similar business models, but the likes of BNP, I mean, that is probably the most US-like of the European banks now. You know, huge prime services platform, big research platform, again, cyclical names, all that stuff, just all really pushing high nicely again. It's good to see. Good to see.
Also, Matt Arbour, if you're listening in, we talked about this last week or the week before. He's on holiday right now. He was saying that, you know, even people should look at sin stocks because with, you know, risk back on everywhere, even sin stocks like the drinks, the tobacco, right? Let's have a look at Monkey Man saying Ange likes text AMD, WDC. Let's have a look at that right now. Loving the engagement today. They're really testing my navigation tech skills, which
Absolutely.
Phil can tell you.
That's
Phil says it's testing.
Yeah, the
I'm
poor
testing
guys in the
him.
gallery, like a Jean-Michel Jarre concert. There's-
Here we are, AMD here for you. And you hear peers talk about this a lot, myself as well, that this is one that is like the lesser loved. Everyone looks at NVIDIA, right? Everyone looks at,
Yeah.
you know, the Metas and the Palantirs in that space. But AMD is one that I am slowly dollar averaging in because I think it has been sort of left aside, you know, that kid that has been the underdog. And look, it is now.
I think because as well they've had a couple of little management changes, a refocusing of business model. I think for NVIDIA as well, when you've got such an enigmatic CEO in charge of the biggest company in the world and the best business to be in, that's a pretty strong cocktail to attempt to fight against that. But at some point, as much as NVIDIA is incredible, you've got to try to diversify. And yeah, and AMD, I'm reading more and more. I mean, I think they're talking about, I think their market share in the NVIDIA space, I think is like low single-digit percentage. But what they're doing, what they're trying to put in place is to get to, I think in 3 years' time, up to 20% of that market, which, you know, that could be immense for a company like that. So yeah, that's a great flag again from Monkey Man. I did see that run out of steam a little bit lately. I haven't been looking at that a great deal the last couple of weeks, but
It has, but Monkey Man, if you like technicals, AMD particularly is one that does subscribe to the, we talked about this last time, the 3 Black Crows or 3 White Soldiers. I've done a technical tips 101 on this. And so every so often you see, you know, 3 red candles, or in your case, you have different colors.
three blues or 3 yellows. Yeah.
And then you'll see a green the next day. And if you look at this analysis on the daily chart, sometimes when you get a good upward trend, it then follows this momentum because there's a great deal. All this suggests, trader friends, is that there are people waiting to get in at these price levels, right? So I've put a perforated, get it out, and
Easy for you to say.
yeah, 150 there, and you can see that people coming back in there. You can see that there's another level there where, you know, the green candles start popping up and it rides higher. You might also be asking, while Scotty was talking away there, we love it when you talk away because I get to chart, is that very quickly, yes, monthly, you can see that it's now starting to have that upward trend. Paying attention not to cross those wicks, if you like. Weekly as well, you can see there, nice, lots of green candles, and also the daily, and you can see that it's still abiding by the upward trend.
Yeah, it's really good, isn't it? Strong chart.
Yeah, so I'm going to come off that because if you can get SSC on your chart, when I've zoomed in this much, my SSP is that what you said, Phil? Can you get SSP up? Because I need to come.
Sorry, SSP? SSP Group, crikey. Okay. Always like to look at things I've never heard of. SSP Group, okay, let's have a look at that. Okay. Yeah, nice. It's having to break back up higher again. Actually, Ange, can we...
Yeah,
Put your platform, it's easier to get to news. That's one thing with this platform I use. It's not great for getting news.
Here we are. We are back right now. SSP. Right. This isn't one that I am familiar with, I have to say. Let's have a look at the news there. SSP Group. Let's have a look.
Oh, first day of trading.
It's a cafe and restaurant chain operator. And this is not today, this is 11 July. I'm just taking a look. This is, it's on the FTSE 250 mid-cap. And having a look there, first day of trading. Right.
Oh no, that's from the 14th.
Yeah, that's not today, people. That's the 14th. Interesting. That's not today. Right, so I'm just trying to figure out for you, because it's not one, it has exposure to India, and it has not had, let me see whether my Reuters LSEG can give us more on this. SSP.
Yeah, absolutely. For Johnny there, let's have a look at Micron.
Let's have a look at Micron.
That's one we've been trading actually the last few sessions.
Yeah.
Yeah, that. Okay, last one. So let's have a little look at Micron quickly. Let me just make sure, because otherwise Phil's going to tell me off I don't expand. Okay, if you can go to my chart, yeah. So I mean, so that's starting to get to a decent level here. But as I like to use on my moving averages, you see the red, which is the 8-day crossing the 34. Bit negative, it's trying to rally, but that's been on a pretty strong downtrend. It looks like probably $105 was the gap higher. It might try and look to close that, but yeah, that's one at the moment. It's trying to fight back, but that's got a few headwinds on it at the moment. Not the best chart you're going to see.
Just taking a look at Arcelor as well, because we had someone asked about Arcelor. Rich McDonald, right? It is Rich from his home in comforts. His pajamas.
Rich, as you know, I've had my one trade in Arcelor that we spoke about. I don't need to look at it ever again.
When was this trade?
So this was back in 2006. We made $13 million when we had a big risk position and it got bid for the next day.
Nice.
So that was so that was my one trade in Arcelor. Well, actually, no, I've done two. That was the biggest one. Happy not to touch it again. But again, another one where just cyclicality. I mean, look at that, right? Again, it's just another cyclical indicator, isn't it?
Yeah, Arcelor. I remember it before it had the merger. Very exciting days. Call to Francine Lacroix at Bloomberg, whom I was manning the ship with at that time. Also, we don't have time left to.
Oh, that's it.
So many names that have been like on the list today. But we'll get back to those when we get Scotty back on. But also send us questions on ask@ig.com.
Love the questions. Love the questions.
Martin Aaron up next on Under the Macroscope. So go and get coffee, go and get your toast, go and get your tea, keep us on and come back and watch everything that Aaron and Martin have got. I think they've got a big treat for you because they've been dialing up their filters.
Wow.
To give us a look at what one should do with your portfolio before and after August 1st.
If that doesn't get a few likes and subs.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100, where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, overowned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down.
Good morning. Welcome again to a latest episode of Under the Macroscope. I'm Aaron Bright, joined by Martin Harris. How are you?
Good, thanks, and you, Aaron?
Very well, thank you. So, lots been going on in markets, as per usual, but things seem quite highly priced at the moment. How are you seeing things?
I think that there's been a lot of momentum in the market, something that we've spoken about a lot. Big thing for me is just how well supported cyclicals are at the moment. So, there's nothing really in the market at the moment that indicates to me negativity, which is almost somewhat concerning. So if you look at like all of the safety stocks that we would normally look at, healthcare, consumer staples, property, none of those are really well bid. And the cyclicals in tech, in semis, in banks, industrials, really well supported. I think, US administration and, we've spoken about this so many times, defense stocks as well, with the big, beautiful bill, the kind of fiscal spending situation, we're almost looking at a slightly inflationary environment.
I think the only thing that at the minute that's probably going to catch attention of investors, I'd say, is whether rate cuts are going to come to fruition. That's something which is on the agenda. I mean, if I think we're priced in for 2 at the moment, September and December. So, I think that is certainly key on the investors' agenda. And I think any sort of disruption to those sort of things could spook equity markets. But then again, if the interest rate cuts do come, you could potentially get a big flurry of stock market activity on the upside. So
I think my concerns are where the consumer is. I think the consumer is potentially looking somewhat weak. That might be an early sign. And given where the markets are and how well supported they are, if we do get the rate cuts, it's just going to, really boost things. If they don't come, it's going to, I think, exactly as you sort of mentioned, that's where we could see a real catalyst towards the downside.
Yeah, I mean, if you look at the sort of Schiller PE, which is it's the PE, but it looks at earnings and earnings average. It 98% of the time over, I think it's a 50-year period, it's actually been lower. So we're at, as we said, quite highly priced levels. But I think that's enough about macro. I think we need to talk about our latest venture that we was our brainchild fairly recently, which is man versus machine. Can a human, or us two humans, beat a machine at investing?
Yeah, so I think, right, there we go. Amazing slide on the screen. So some sort of over a cup, we'll say it was a cup of coffee yesterday, had an idea around, can we, given, you take a look at the environment for a UK retail investor and the tools that they have at their disposal, particularly around talking to an AI chatbot, finding out what's happening in the market, and then based on that, gone down and we're back. Based on that, can your AI chatbot invest for you?
Yeah. I mean, look, you can ask AI to do everything at the moment. Obviously, it's not a silver bullet, but we wanted to see what AI would come up with and how we could then construct it based on active management and where we think AI is missing a trick. So I think with that being said, I think we should probably look at the portfolios.
I think, hang on a moment, let's talk about a bit more about where we got to. Let's go back one. So, all right, so I think why we're doing this, one, markets have been so boring this year, so little going on, we needed to find something to talk about. And we basically been running out of things to talk about. Saying that obviously very sarcastically. Maybe just talk a bit about what the rules were in terms of how you prompted AI and got to this position.
Yeah, so we gave it an idea of market conditions. We asked it to provide a summary of market conditions, and then we built a portfolio based on constraints. So long only, no leverage, maximum 50% in one ETF, 20% in one stock, and 80% needs to be in equities with 20% in cash or cash-like bonds. And then the weightings will be across different asset classes and sectors. And yeah, the prompts are sort of on the screen there, pretty much word for word what we did.
All right, so really basic, just those two prompts.
But yeah, this is a disclaimer that obviously this is not investment advice. It's purely for educational and entertainment purposes. And yeah, do not use this as investment advice because we are not giving any investment advice here whatsoever. Right, should we go into the portfolio?
Yeah, so I'd love. So after you gave it those two prompts, I'd love to see what it spat out for you.
So this is the AI portfolio. Quite basic in terms of the number of positions, but I think what caught my attention is it's obviously going for a world equity position, which is predominantly US based. It's understood that we're in a period of geopolitical turmoil based on the macro summary. So it's added BAE Systems, Lockheed Martin, two huge defense companies, as well as decent positions in emerging market equities, which are quite well priced and has got a significant tailwind at the moment in regards to the economic outlook and with regards to, I guess, the sort of de-dollarization trend in the US. I think what caught my surprise in particular was it's got something like 15% in clean energy shares, if you look at the pie chart, which is pretty substantial. So yeah, a lot of clean energy, which is something that we were surprised about, given just the weightings in this space, given the sort of volatility which had been presented in the sector, and given the fact that this trend has reversed somewhat in the past couple of years.
Yeah, I think taking a look at the portfolio that AI came up with, one, I was impressed. I think in terms of, it obviously synthesizes a lot of information, and so it's read a lot of model portfolios. So it starts off very general. So it's almost well diversified in the ETF space, not taking a particular position, but then based on, I think, a lot of recency bias in the defense space, it's picked out Lockheed Martin and BAE Systems. I think that is what we're going to probably watch each week. We're going to not try and tame the AI too much, let it pick stocks and see how it performs versus us, where we then take the AI portfolio and try and manipulate it slightly. So picking Lockheed Martin, BAE Systems, and Next Era Energy. Next Era Energy is I was surprised to see that. Wasn't really familiar with the company until ChatGPT suggested this, and took a look at it. So it's the largest electric utility in Florida. So it's got 8 million customers, and what they do well is actually when natural gas prices spike and people switch from gas to coal energy, Next Era typically do well.
Yeah, I think with that being said, I mean, obviously decent cash position there as well. It's used the maximum amount of cash. I think given the fact that markets are at quite highly priced, as we both mentioned. So I think that's why it's gone for sort of a max cash position, waiting to deploy it when it sees valuations change. And I think we should probably go onto our portfolio now, which is obviously we've got one which is got some more positions in it, but the composition is broadly, I'd say, quite fundamentally different. The asset allocation is the same, so 80% equity, 20% in cash. We've gone for much more granular positions. So we've got 25% of the portfolio in US equities, 8% in emerging markets. We've also got quite a chunky UK position and a European equity position, and that's mainly driven by valuations. We've got a little bit in NASDAQ as well to sort of spice up our US position, add a little bit of technological bias towards the portfolio. European equities as well. We've seen really strong performance there, and we think there's a decent amount of tailwind behind that position, particularly around the stimulus spend and valuations being attractive. The Chinese one is also a little bit of a diversifier in these portfolios. Another region which has been undervalued relative to the US for a number of years, and yeah, something that could do well potentially. There's a strong sort of long-term growth outlook in these portfolios. In the China region specifically, I would say, based on its valuations and its potential outlook. Another area is defense. We've gone for an ETF, which is basically a pure play defense ETF. Around 60% of the exposure is in US defense companies. And yeah, it's got obviously we've seen a huge trend towards conflict over the past few years. And if that continues, we're likely to see those companies benefit from that situation. Gold is another position where we see good diversification benefits, which I'll talk about a little bit later. And Shell is sort of a pure play on oil and geopolitical conflicts if the oil price rises.
Yeah, so I just wanted to, I think we didn't really get to speak too much about it in the beginning, was that this is our response to the AI portfolio. So AI has gone for positions in specific positions in Lockheed as well as BAE Systems. Personally, and it's something I've spoken about a number of times, given the big beautiful bill, prefer to take positions in Huntington, General Dynamics, and Auctus, looking at the shipbuilders as the key beneficiaries in that defense space. So really what we've got now is, instead of taking the individual positions, we're taking a broader defense ETF position. And the portfolio from AI missing, I think, the main diversifier in gold. So that was an obvious choice for us to make, is to add gold to the portfolio. And the other enhancement is that specific position to Chinese media and tech in the Crane Shares K-Web ETF. That's a lot of interesting sort of fiscal stimulus happening in China. That market's well supported, and there's quality and momentum within that ETF. So those were the main changes that we wanted to make to the AI portfolio. And yeah, now we can have a look at those side by side. So, I mean, what stands out to you there, Aaron?
Yeah, I mean, we've obviously taken much more granular positions. So we've gone for geographies a lot more. They've decided to put it all in the world ETF, which isn't necessarily a bad thing. The world ETF has done pretty well over the past decade or so, but obviously there's a huge bias towards the US. We felt like it was an opportunity for us when we saw the allocations towards the world being so high. We thought, right, let's go into something a bit more granular and look for more specific opportunities where we see valuations are trending to be, more palatable than perhaps some areas of the US, which are trading at quite frothy levels. And I think we've gone for thematics, but at not such a strong level that AI has gone. I think they'll look at a theme and really lurch towards it. I think that's what AI has done, and we've identified some themes, but we've understood that with thematic positions, you take in a huge amount of you take a huge amount of sort of sector risks. So, if there's a huge decline in the defense sector, let's say, then those positions will be hit hard. Same with the clean energy sector. So, it's important to understand that that's quite a specific risk towards a specific sector. So we understood that, and that's why we're quite, I'd say, more diversified than the AI has been.
Okay. And so this is kind of our week one. This is our foundation phase. We've prompted this as the core portfolio. What are we expecting to do now? We've spoken about it. Let's share with the audience. Each week, what are we going to be doing?
Well, we'll have a look at how the portfolios do, and what we're trying to do is essentially see how AI does, see how we do, and then prompt AI to make any changes after giving it a sort of a macro summary and see what it does and see, if it makes interesting investment decisions or if it sort of makes decisions without putting things into too much context or without understanding risk dynamics. So be quite interested to see how it does and also how we manage risk in our portfolios, which, if I bring up another slide here, this is kind of an idea of how we got to some of our positions. We sort of looked at correlations between asset classes. And
so you've taken the AI portfolio, put it into your correlation matrix, and then tried to optimize it.
Well, we've looked at general indices here, and commodities, gold, and property. So we've looked at the correlations between those and said, right, which are going to give me the maximum amount of diversification, because we're looking for areas which are actually red on this chart to add to the portfolio, because the best sort of portfolio is one with lots of combinations of non-correlative assets. So if you've got one which sells off, another one won't be as badly affected. And if I take gold, for example, and its correlation to the S&P 500 over, I think this was over a 3-year period, it's 0.07. Obviously, one would be the maximum amount of correlation moving in exactly the same direction. You've got that, obviously, the individual securities are 100% correlated with one another. That's why you've got a 1 for, the S&P 500 and the S&P 500. But securities which have lower correlations add diversification to the portfolio. So that's something that, went through my mind when constructing this portfolio, between the two of us.
All right, good stuff. All right, so I think trying to keep it fair, each week what's going to happen is we're going to prompt ChatGPT again with the same 20 as 20 on there, same 2 questions. Nice one, David. Are you trying to get yourself fired if the AI wins? Well, we're trying to enhance the AI portfolio. And we're going to give it the same 2 questions each week. One, give us a market update that's relevant to a UK investor. And 2, based on this information, are there any changes that you want to make to the portfolio? And we want to try and limit that to a 20% weighting change.
Also, timeframes are very important. There will be periods, potentially over a week or a month, where AI might do well, might do better than us, but we're looking obviously for longer term performance. That's the best measurement of a portfolio manager and active portfolio management.
Yeah, I think there's something here is that this is really just an experiment in investing, and we're not looking to trade the portfolio. And interested to see how we perform, I guess, against AI. And really, it takes a look at what any sort of person off the street, if they were to go and speak to ChatGPT, what portfolio it would generate for them with some very basic prompting.
Yeah. And with that being said, that's all for today's slot. So All Sessions is next. Tune in for that, and look forward to seeing you again just after the break.
In the last video, we talked about how the S&P 500 has a higher PE ratio than the FTSE 100 because investors expect faster earnings growth. But let's look at what happens when those earnings actually grow and why that makes such a big difference. Here's the S&P 500 in year one. Its PE ratio is 24 times, which means investors are paying 24 times the earnings to buy shares. This tower represents the share price. The height of each block reflects the unit of earnings needed to support that valuation. Now, let's jump forward to year two. The share price hasn't changed. This tower is exactly the same height, but look what's happened to the earnings. Each of these larger blocks represents higher earnings compared with the smaller ones from year one. Because the earnings have grown 50%, what used to be 24 times earnings in year one is now only 16 times earnings in year two. That's a huge improvement in valuation, even though the share prices have stayed the same. This is the power of earnings growth. When companies deliver stronger earnings, the PE ratio naturally comes down, making the stock look cheaper, even if the share price hasn't changed. And when investors see that kind of growth, they're more likely to stay invested or even buy more shares. And that's what pushes the PE ratio back up. And that's what makes shares go up or down. Now compare that to the FTSE 100, where earnings grow more slowly. Even if the share price stays the same, the PE ratio doesn't improve as dramatically because the earnings aren't growing as fast. That's why growth is such a critical factor in investing. It's what drives long-term value. So here's the big lesson. Earnings growth doesn't just boost a company's value. It makes the stock more attractive by improving its valuation over time. As an investor, the holy grail is to find companies that can grow their earnings by more and for longer than other investors may already expect. This may even mean avoiding shares that are already very popular, over-owned, and potentially overvalued. Because if a stock on a very high PE ratio misses its earnings estimates, then the price can come crashing down.
Hey, trader friends, welcome back to All Sessions with myself and Scott, who's kindly agreed to stay for his sins.
If you thought the first hour was exciting and worth some likes and subscribes, this is going to absolutely deserve them.
Blow your
Absolutely
head off.
deserve
We
them,
have
absolutely.
3 minutes to go. Some of the key things that have been coming down the wire recently, just updating you on some of the news headlines. We've got Air India warned by India's regulator that it could face enforcement action for breaching safety standards related to crew fatigue management and trading documents. We saw, of course, a few weeks ago, I don't know whether the investigations, Scotty, have come out with anything conclusive.
I don't recall anything. I don't recall anything, no.
Yeah, but there was a bounce in the shares of Boeing when it came to light that the little buttons that gave power to the engines couldn't be accidentally nudged, or there was no suggestion of malfunction, shall we put it.
Well, I think
what the suggestion was. So there was a bit of a reaction, a bounce.
Well, and the White House super salesman, the Donald, has just, after recently being on his world tour, convincing a lot of people in the Middle East to buy more Boeings as well. That's That's another big boost. Should help them to take off.
Yeah, yeah. Speaking of dividends, after that poll, we got LG Electronics saying to pay dividend, and we also got the Reckitt chief executive saying we're not really moving our prices a lot right now, up or down. But as we count down to all sessions, we are, of course, watching out for Tesla. What do you think?
I mean, yeah, I think the follow through price action will be key. I mean, he's been pretty unambiguous about how in the short term it's not going to be great. I mean, this stock loves to trade between sort of 280 and 350, so it gives you plenty of opportunities. I can't help but think it's not wrong to keep looking at it.
Yeah.
I don't know if you want to DCA it, but anyway, all sessions is here.
Ring the bell, ring the bell. I think the bell's your side,
crikey, it's hiding. Sorry, it's those accursed portfolio construction guys hiding the bell. Little do they know that is the only thing in this studio of any value.
And we
Right,
fixed it.
that's
Cam
it's
fixed it
going
yesterday
up.
after Pete
Absolutely.
Ward broke it. Right, let's have a good look at the winners. Got Alphabet there, top of the list. Whew, up 2.5%. You guys heard it here first yesterday. Andrew was saying if I had to choose long Alphabet, short Tesla was what I said yesterday. Let's have a look elsewhere at the gainers first. Broadcom.
Not investment advice, but just highlighting that Angie is a trader.
Scotty, take us down some of the other winners before we move on to the losers.
Well, interesting Broadcom following as well. I mean, look at that semiconductor 3 times bull ETF. I mean, that tells you how much. I mean, look, we've seen a proper break, right? We've seen a proper break again in the market. So everything that you would expect to, everything you would expect to be tracking higher is tracking higher. Interestingly, a little bit further down, ASML trying a bit of a fight back after a pretty poor set of numbers earlier on this week. But yeah, I think that's got a bit of a way to go. Probably a tailwind from the sector, but yeah, a few company-specific issues there. Yeah, let's have a little look, see what's at the other end of the hit parade.
Chipotle.
Oh, goodness me.
Yeah, big one there as well. Call
Is that
out.
reported, Chipotle?
Well,
9%?
Call out to Richie Rich if he's listening, because he also was messaging very late last night. And Chipotle at terrible numbers, showing that consumers will not just keep paying ever higher prices. So that was disappointing. Investors not liking that. And it was down after hours, down 10% there. So no surprise, down 9 and 3/4. IBM also on the losers list there, down
Yeah, numbers
5%.
disappointing, weren't they, as well?
Of course, that is the biggie that we're looking out for. Not far from what was expected, actually, because the indication was down 4.4%, right?
Yeah, it's just not in the right place for some of the tailwinds at the moment, is it? I think that's the difficulty.
So let's just give you the the minute chart here, if I may. There we have it. Tesla is really, really, as we expected, taking a hammering there. Those of you that shorted this, well done you.
Yeah, amazing.
Also, we also had a poll. Did you say, Producer Phil? Oh yes, well
nicely
done also.
Well played, everybody.
Yeah,
Everybody.
we had a poll yesterday as to whether you were long Alphabet and short Tesla, or short Tesla, long Alphabet, and long. We had a short as well.
Is that a poll from the viewers or from the Discord?
From Producer Phil.
Well, I mean, listen, it's the single espresso hedge fund. I can see that starting up. I can see that starting up.
The Singo.
Singo. Sorry, yes, Singo.
The Singo hedge fund.
Singo Capital LLC. There we go. Nice. I've already thought of the.
It's got some kick.
Yeah, I have to start calling him Phil Axelrod now, haven't we?
Just showing you as well the given we were talking so much about Tesla, there's a very, very cool graphic that I'm going to get up for you here. I think that is maximum. Let's see if I can zoom in even more there. But you can see here very simply that, you know, a lot of this news is down to that revenue figure. We also have, you know, the regulatory credits and leasing, energy and generation and storage, you know, 2.8 billion there. Gross profit was 3.9 billion. But really, the concerns surrounding auto sales, the lack of outlook concerning Optimus, robotaxi starting to feed through. I'm saying, and this is my humble opinion, this is not trading advice. I'm thinking in the short term, still going to be quite a lot of pain for Tesla.
Well, I do have quite an interesting little chart that I brought up from my terminal here. If we can just highlight it, so you'll see I try to use as little crayon as possible. I use enough crayon for it to look good, but not too much crayon. If you can see that lighter green line that's sort of floating, that seems to be providing the bounce, that's the year-to-date VWAP, which is also a bit of a psychological as well as a monetary level that I sometimes like to have on stocks like this. So this is where investors are effectively, or the market is net long. As you can see, even on the Trump tariff mania earlier on this year, you've had a strong bounce. June, you've had a strong bounce after he stepped away from the White House, and then again the last few weeks. So that's been a bit of a level, and look, it's looking to open at about 311. So that's not too far away. So if you get from 311 down to $300, again, it might just be an interesting one to look at. It's another metric that I like to sometimes use, because the price action is key. But yeah, when the CEO is telling you short term it's not going to be great and the numbers don't come in well, that's not going to get people too excited. Anyway, back to all sessions. Let's see if anything's been changing again for us.
Another downbeat stock here. IBM all sessions is down more than 5%. This is the 1 minute chart there. This is after the company missed its Q2 software sales estimates. Alphabet, let's have a look at Alphabet there. Because Alphabet, of course, had numbers. It's up 2.4% there, trader friends. Let's have a look at the 1 minute chart for you. There we are, big gap up there. Also, along with the nice set of numbers from Alphabet, JP Morgan also raising its target price to $232.
Wow.
From 200. Not a hard call there, given they're doing this after the numbers came out.
I think this is a bit. I think you're going to see this with some of these stocks that are spending on things that are slightly in the ether, if you'll pardon the pun. But I think you'll see these companies now going to be reporting, and then you're going to get the upgrades afterwards, which is almost what you want, because at the moment, I mean, if you're looking at forward estimates for the PE and EPS next year, they're already trading pretty rich. So you need some upgrades to meet the current price levels and then beyond. So I don't think that's an awfully bad thing. Listening to Piers actually is, when he was speaking the other day, did he talk much about Alphabet on the show? I don't recall him.
He did mention it, but I think he was talking more about some of the stocks that he is waiting. Because every single time they talk about why he thinks Palantir should fall, because I think he's short Palantir. Let's have a look. Yeah, but he was also saying that you know, he keeps thinking that there will be a correction for Palantir.
Well, as Rich loves to talk about the PE multiples, when something's trading on hundreds of times of forward earnings, then it starts to becoming a bit of an abstract concept, doesn't it? The actual price and valuation.
It's, I would crumple paper and I'd throw it out the window, but there's no window in this green screen box here.
Absolutely.
Also, Piers talks a lot about NVIDIA as well, about how he is expecting a correction for this. But yet again, I mean, look at that freight train, people. Look at that freight train
is exactly that.
You know, that momentum. You don't want to step in front of a freight train when it's still going in that way. Technicians say The trend is your friend here. Also, taking a look elsewhere because
The trend is your friend.
there you go. American Outfitters. I know some of you trade consumer labels here. I don't know whether I can bring that up for you, but it is one of those that
American
is
Eagle, yeah, there you
Eagle
go.
Outfitters. It is moving, and it's not on all sessions one. But I just wanted to show you this because obviously we can get pre-market elsewhere, which the Ange has due to my AI filters. This is not one we offer on the IG platform, but if you're going to trade this in the cash session, I can tell you that American Outfitters is indicated up at this moment 20% higher. And this is after its new campaign with actress Sydney Sweeney. Don't ask me who she is. I can talk about tech and I can talk about stocks and I can talk about no idea who Sydney Sweeney is. Sorry, help me out here.
She's an actress lady who's
talk
been
about
on
Octo,
a few
Ryan Mattel.
Netflix shows. She's been in a couple of movies as well, but more importantly, she is one of Tom Brady's new friends over the summer. So having those two together is a definition of another power couple. But yeah, I mean, look, so actually brands like that, I mean, if you take my daughter who's going to be 17 in a couple of weeks' time, I mean, she loves those kind of lower end US brands. She'll happily head up to Covent Gardens to specifically go to some of these kind of shops. It's all that kind of US sort of throwback. Yeah, the preppy gear, but some of the Pink Floyd t-shirts and sweatshirts and all this kind of stuff, that kind of retro-y throwback stuff. Yeah, and if you've got someone like Sydney Sweeney, who's a massive influencer or whatever they're called, then yeah, you know.
There you go.
Some of the tailwinds on these brands can be big.
Scotty Byrne, not living under a rock, and yes, living under a rock. Learn new things every day is a learning day. Right, please hit the like and subscribe button if you enjoyed this. Thank you for the poll results, and also Scotty, thank you very much.
Amazing to be back again.
Here. I mean, been so much fun. Maybe we'll replace Rich with you. I hope you're listening, Rich.
I couldn't possibly say it to like for like.
Yeah. Rich, hope you're packing and packing well. Rich is off to Ibiza soon. We're going to have live Q&A next with producer Phil.
Bring me the next shiny new thing. Bring me the next shiny new thing.
Today we're here because we've recently launched our Save Our Stock Market campaign. We just want to raise awareness for terrible cash returns that everyone is getting with their money just sat in cash ISAs. What we want to do is raise awareness for the great returns that you can get on UK stocks and help revive the UK stock market and get people investing.
There's a lot of bad feeling about the UK stock market, and it's really negating people's view on the UK market as a whole. There's some great companies. If we just start the ball rolling on people getting behind the UK stock market, then we can start to get the interest, and it's days like this. We get awareness of all the crowds talking about stocks. It's really that awareness, and ideally we'd like to take it to the government. We would like cash ISAs to be reduced, not because we don't believe in the chance of people saving, but more that you get higher returns, as much as 7 times historically in investing that you can from cash. And that's not saying people go out and take a load of risk. It's about education, and it's about helping people to understand the benefits of investing and the limitations of holding their money in cash.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show's finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
We're watching a crisis unfold in the UK and we need to take bold action. Our stock market, once the envy of the world, is in a dangerous downward spiral. At the same time, the UK is stuck in a damaging savings-first mindset with far too few people investing to build wealth for the long term. With our Save Our Stock Market campaign, we're calling on the government to deliver the urgent policy changes our stock market badly needs, from scrapping stamp duty on UK shares to encouraging a shift away from stagnant cash savings and using incentives rather than penalties to get people backing British firms. And to show we're putting our money where our mouth is, we'll be offering every new customer who joins IG across July and August a free UK share bundle. For too long, policymakers have been paralysed by the desire to keep everyone happy. But the time for working groups is over. This is about getting more Brits investing while saving a strategic national asset before it's too late. You can read more about IG's SOS campaign and free UK share offer on our website.
Hey trader friends, we have the one, the only producer Phil joining us to take all your questions and answers. Good morning, how are you?
I'm good. It's been a while.
It's been a while.
I've just been busy.
I've missed you.
And I don't like things in my ears, as my wife can attend to. I've got small ear canals, so I don't like the earpiece. No, I don't like that either, James. I won't repeat what you said in my ear.
James just said, how about wet finger?
But yeah, I thought I'd come on. It's been a while. We've got a few updates, but as always, there's a nice little live Q&A. So if you've got any questions, we'll take them. Rich is obviously on holiday in Ibiza, so he's left us alone. Kind of. He's still on the chat. He's still definitely watching. But yeah, this is. I think it's an exciting time we've got coming up over the summer. I'm going to start to go through a few things that is happening over the next 6 to 8 weeks in the show. So as we are holiday season, people on holidays, we've got different guests coming on, sometimes a lack of guests as well. So there might be a few more kind of playouts for people. But we have got a nice little new segment from Axel. He's going into a deep dive for pro tips for technical analysis. So I know Monkey Man that you mentioned about wanting Fibonacci stuff. He's gone into that. He's gone into Elliott Wave. He's gone into negative and positive divergences, one of your favourites. So we've got a series about that.
Love a negative divergence.
Exactly. So we are adhering to the people. So that's going on. Obviously, Rich has got an IG. I've got the new podcast, so that'll be played out as well. So if you're not watching it on Spotify, Apple, please do first. It's going to be replayed on the show, but please do watch it on the actual relevant platforms first. But if you do miss it, then you'll be able to watch it here. So yeah, studio move, roughly. Well, not studio move, studio rebuild.
Yes.
Yes.
We got date.
About mid-August. So I've got a now very stressful 2.5 weeks with my good colleague and friend Dave, who helps run the studio, as well as the directors as well. We're all going to work together. We are going to rip this thing out, basically, and make it look much, much better.
Including Ange and Rich.
We're ripping them out and they're gone. No, Ange and Rich are part of the furniture now. And their time gets used and abused by me as well. So about mid-August, we're going to do a different style of show. So Rich and Ange will be at home. And
whilst they're ripping all this out.
Whilst we're doing all the heavy, hard labour and all the work, they're going to be lying in till 7:30.
Pajamas underneath. No.
Yeah, whilst we're still here.
We will be delivering the same quality, same tradable instruments ahead of when they happen, hopefully, straight to you, whilst the producer Phil is hard at work beautifying.
Exactly. So it'll be a shorter show because it'll look a little bit different, but not too different. We'll keep it relatively the same, but of course we don't have the studio. We're going to have to do things a bit differently. But I've done this long enough now to build a show and to build a studio, so don't worry, it's still going to be a good show. So yeah, around that, and then about the first week of September, first couple of weeks of September, we're going to have basically a new looking studio, new cameras, new backgrounds, kind of, yeah, it'll be a bit of a new show. In the same style, we're all kind of doing content strategy, we're all making sure it's the same style, but it'll look very similar. But then I go on my honeymoon the first 2 weeks of September, so good luck, guys.
Wait, how many honeymoons, mini moons have you gone on? Because like I feel like there's been more than this one.
No, we went on a mini moon just after we got married, me and my wife, and then now we're going to Sardinia. So yeah, but James is after my job, one of the directors.
Yeah, James is in there already saying, I can do Phil's job while he's away. I can.
Without trying to big myself up, I don't think many people can do this job. It's hard dealing with you guys every day.
Without bigging my job up, before producer Phil was here, I was also getting guests in for the show. So
yeah, so
it was hard work.
So yeah, the first 2
Thank God
weeks.
producer Phil is here.
I'm here to stay.
Supporting us.
The first 2 weeks I'll be away whilst the new studio. So it's going to be.
I owe you £5, Boise, or a meal. Tell me when you're here. I'll take a. It wasn't me. Producer Phil will tell you.
I remember you saying to me, I don't want to pay for postage. I'll get Boise to pay for it.
The reception said, just give us anything you need posted to our clients. Give us the address and the thing on top, and we'll send it for you. I wrote out the address. They obviously sent it out without putting any postage on. Shame on them. You can ask Theo Van Barthold. He got the bag that didn't have postage. It was stamped. It was.
Sometimes it's good to take responsibility for your actions. Just take
and pay for all the postage. But Boise, tell me when you're in. I'll take you out for lunch.
So yeah, obviously like new show, new studio. So there's going to be lots going on. Of course, the Discord's still going as well, and we're going to ramp up a portfolio challenge against Rich and his new cohorts for the art of investing. So we obviously the poll and the people that are interested in it will make a channel. We'll invite you. Maturian and I have worked on a little bit of a setup of what it could look like. Still fleshing out, I must admit. Rebuilding a studio does take time and effort, so that's where most of my priorities have gone. So yeah, we'll do a Discord portfolio challenge. So if you're not in the Discord, add Maturian, Matt203, and he'll invite you.
What is with the 03 is what I want to know.
I don't know.
Are there many Maturians out there?
Maybe.
Is there a 1 and 2 already?
But yeah, with the community-led Discord, we'll be running something there for everyone to join in. So if you do want to join in, you're more than welcome to. And that's kind of roughly the what I've been up to recently in the background. We've obviously had some great guests on as well, some new guests. We've had a few new directors as well because of me transferring. I used to press the buttons, and now I produce with new people in the studio, and then we've also got new people on the show, which is great. And of course, anyone that you guys like, let me know. Anyone you don't like, I'll take your feedback and think about it. But I think generally 95% of people we've had on, if not most everyone, has been good.
Yeah, and we take your feedback very seriously. A lot of you saying you loved Simon Popple. Please give us more goal guests. And also, Andrew McKilvey, thank you so much for emailing in your thoughts as well, and Monkey Man. So I listened to that. R. Sachs as well, thank you for your comments. So you wanted more goals. So I'm bringing you the Godfather of Gold. He's confirmed he is coming on in September.
Oh yes, yeah, this guy, yes.
Yeah.
That'd be good.
What were we going to say?
So I thought you were confirming guests with the audience without confirming it with me, but
no, I've confirmed this already.
Yes, you have, yeah. Whilst I'm away, so that'd be great.
Do send in your questions because it is Peter Hambro. Those of you who trade mining or in the mining space, you will know Peter Hambro. It's up on my screen here if you want to zoom in on that. Thank you so much, James. He is, of course, of Peter Hambro Mining and then Petropavlovsk. Great character. And he has been the person that has been a pretty much like, you know, the constant at the Mines and Money and now known as Resourcing Tomorrow. And so for those of you probably know him as the chief CEO and the founder of Peter Hambro Mining. He'll be coming on in September. So any questions, please do send it to me on ask@ig.com because he has been calling on this gold bull run since it was at 1,300.
I don't know how you pulled this off personally, but yeah. It's
with a
great.
spleen.
With a spleen, yeah. First question, please, guys in the gallery. Lovely. Canary J. How many people do you use to make the show run every day? I like this question because I think there's two ways of answering it, realistically. In terms of actually crew and making the show happen, there's three of us in the gallery every single day. There's me, the producer, and there's 2 directors. We swing between 5 people. We have Mr. James Watson, who's in the chair right now, and I used to go to university with James. I've known him for about 10 years, and we've always got along really well, and it's always been good fun to work with him. We have Cam Kwan, who's been at IG for a long time, part of the furniture.
9 years, I think.
9 years, and he looks like a mid-20-year-old man, but he's actually in his 50s, and it's really hard to explain to people that this man is in his 20s.
He has good Asian genes.
Really good genes. Then we have Terence as well, who's been at IG for quite a while. Really good operator as well, and very dry sense of humour. 4 years he's been there for.
Terence extremely good on tech as well. I have been trying to get him on the show. Trader friends, please help me. Say on the chat here so I can show him that you want Terence on. He's the one that was on with me when we tested out the Meta glasses. You hear him call him Meta Boy sometimes. But he runs a lot of Angus tests. So recently he tried, for the first time ever, a Dubai chocolate. And I filmed his reaction.
It was a bit meh.
Pretty Zippel had one too.
Yeah.
Wasted.
It was wasted. And then we've got a chap called Dominic Van Hal, who I actually used to work at Meta. I used to, well, I'd say manage him. I didn't really manage him. We just worked together really well. And then he's back here, and yeah, he's another great operator. Lovely bloke, great musician as well. And then Yanis Fizi, again, went to university with. So another bloody good operator. I've not seen him for a few years, but it's nice to see him again. And in terms of actually like the people at IG, to actually make the show work, obviously we've got you and Rich that do the show. We rely heavily on PCMs, etc. So there's quite a lot of people that work on the show that make it happen. Of course, people we work with, like Sophie, as well. Dan, Sebastian as well, a new editor. Sophie's the content manager for IG, so we work very closely with her. And then Dan's the editor, Sebastian's the editor. We've got a new editor, so new content coming, which is amazing.
We've only been waiting 6 months, right?
Only been waiting 6 months. Didn't want to wait any longer.
Call out to Seb, because yesterday he and I filmed our first, just whack out my screen there. If you go to, that's the home page. If you go to Shorts, you'll see Seb's good work there. When we went outside, risked our lives to talk about Tesla.
Risk your life. You're on the pavement.
I was on the pavement, about to get crushed by a dumper truck or a London cab, but we made it. So that is Seb's good work on his second day, might I add, second day.
Well done, Seb. Wait till you sit in this chair and you're doing the live Q&A. All right, okay, let's go. Monkey Man, we saw this question, but we're probably going to ask Chris tomorrow, as it's for Chris, and Chris is on tomorrow. So we will get Chris to talk about this live with you. So, of course, make sure you tune in tomorrow. So, yeah, we'll move on to the next question. Cheers, guys. From Rana. Some of the co-presenters often talk about their clients. What do they do for the clients exactly? And are they trading the clients' accounts? So, Rich Rich is a client. That's kind of how this all started. Is Pete Ward, who's a client manager. Rich is a client of Pete, so they've worked together. And then there was obviously this job that kind of came up for Rich. So they basically help manage their positions and help work with them. You might know more, Ange. I'm waiting for you to chime in here, to be honest. You work at IG.
There's a lot of...
what do the client managers do?
The client managers are worth every single penny they get. They help our clients put in trade, sometimes very large orders, very quickly. They also make sure that our clients are aware if it is nearing a stop or it's nearing a limit. They advise them. So there's almost like a personal alarm. They advise them whether or not to go further into the long, stay with the long, or maybe, bring up what we call manage your stops, right?
Sure.
If the markets are going against them. What's also key with the PCMs is, they, like me, watch volatility. So if there's extreme volatility, they give their clients a heads up, either through a call or a message, depending on how the clients like to be nudged. And PCMs really, the reason why I say that they are amazing at their jobs is quite often they do get clients who just want to talk or just want to ask them why a trade has, gone a different way that they thought. And so they're very patient. I have been next to them many times because the Bloomberg terminal, which I use, is next to them. And I've seen them handle our clients with such grace and care. I don't think I have the patience for it. I would.
No, I don't think you would.
I would cut to the chase because sometimes they call up and they want to chat and it lasts like 20 minutes and they haven't got to the trade yet. They haven't got.
They're just chatting.
They're just chatting, but they're extremely good. They've got wonderful bedside manners.
Lovely.
What does the studio look like without the virtual set, Johnny Warburton?
We'll get to your question, Johnny. Don't worry, you're on the list.
Yeah.
So that's what the client managers do, and of course they come on most mornings as well. So they're fantastic for
They
us.
also get asked quite a lot of interesting questions. Like I was next to Luke when he was asked by a client. I want some exposure to uranium. What do you reckon?
Yeah.
So they have to be extremely knowledgeable in what they do.
Of course, yeah. Very versatile. Next question, please, guys. Lovely. Friar Tuck, who is one of our great moderators in the Discord. Friar Tuck, thank you for volunteering for that. Does TradeLive IG have any events that trader friends can attend planned? We currently have nothing directly planned.
You mean you didn't get the memo about Marbella?
I did not get the memo about Marbella, which I'm a bit ticked off about personally. So we've got no events directly planned for the events. What we do is basically, I can't concentrate when you guys are in my ear so much, bloody hell.
Now he knows. Now you have to ask producer Phil to put charts up rapidly and move them from side.
I'm not a professional in this. I just come on for a bit of a giggle.
I'd like to have a trader friend event. It'd be fantastic. I've met so many of you already. I've met Mo.
Yeah.
I've met Mervyn. We've met
a few people.
Yeah,
I forced everyone to
Stacey.
subscribe. But yeah, it's obviously Tasty do their events, and I know part of the question as well was to live stream it, but we asked this to Tom, and live streaming, basically live trading, is a massive regulation issue. So it's basically easier for them to not live stream it, because I wanted to record it and put it out on the show, but unfortunately it wasn't a thing. But I think as the channel's growing and the show's growing, we would like to do some kind of community meetup. And I understand, Friar Tuck, that you live in Australia. So of course that would have to be a long journey to meet up, and we'd have to plan that in advance. So yeah, there is kind of, I think, ideas in the mix to potentially do future events, but we are definitely focused on taking the studio down and rebuilding it first. Little baby steps at a time. So,
we should do like what Tasty did. We should do a recording and a sped up timeline of before to after.
That's a good idea. So Dan, Sebastian, if you're watching, add that to monday.com. And we'll do a mini documentary about the studio rebuild.
Yeah.
Perfect.
Yeah, with
Get it. More work for you both.
Dan has a question.
More work on that, Dan, don't worry.
Johnny Warburton, just very quickly, just put it up my screen, James. It says, what does the studio look like without the virtual set? So if you
What are you
go
going
on
to show
to
them?
Twitter,
Oh, okay.
on my Twitter, you can see that I post lots of pictures of behind the scenes. And that was behind the scenes with Ronnie Eggnog and Lucky Luke before the recording of their latest podcast, Talking Shop.
Yeah, people might be confused by the carpet. And I must admit, I'm confused by the carpet as well. But it is basically, it does help the sound, but it does smell like feet.
It does.
So that's also getting chucked in the River Thames as well.
It's a bit like a gym here.
Yeah. So yeah, that's gonna. So it will be a bit of a. To address your question further, it will kind of be less virtual and more of a background with nice lights, nice cameras. So it's going to look nice. Anyway, Maturin's question, guys, please. The next one. To keep the show on the road.
Next question.
There we go. So this is for you, Ange, because I'm definitely not answering this. Gold, we've obviously talked about gold this morning, and obviously Rich took a position on gold this week as well. Gold's talking about the dip recently, now at 3375. Is it time to short or buy the dip? And then also we'll have a look at London cocoa and coffee. I guess we're talking about, is it buy the dip time? And of course, this is just purely just your humble opinion and nothing further.
This is my humble opinion. So, Maturin, greetings to you in sunny Spain. As you can see here on my chart, gold has been moving in that band, which I've drawn out for you, 3,500 and 3,300. I'm sure you were with me, along with Monkey Man and Arsax and Andrew McKilvey. This time, well, not actually this time. When did Frank Caberna come? He came in September, trader friends, and during that time, he was looking at me in this odd manner when I said 2,800, 2,800, and then after that, 3,000, right? And now look at where we are, 3,373. The key thing here to remember, Maturin, if you want to bring up that question again, James, is what is your duration? Did Maturin put a duration there, trader? Was there a duration on the question, James? You want to pop that up again?
I don't think I think it was just generally by the dip time. Like, are we in that kind of?
Okay.
Are we still? I guess the question is, are we still looking to move higher? And I guess like what you mentioned with Simon Popple's view on it as well. Then
yeah. So if you are looking, particularly for gold, if you are looking at a duration of anything up to 3 to 5 years, then yes, it is by the dip time, because I truly think we are in. This is just the beginning, trader friends, of a wider cycle, especially if you're looking to hold this until the end of the Trump term, because it's going to be, no matter which way you cut it, there's going to be uncertainty. There is going to be heightened, you heard Scotty and I talk about that earlier.
Yeah.
Trump is making a huge gamble. He is going to, well, his bet is he's going to kickstart growth, but he's going to kickstart growth by devaluing your currency, my currency.
My currency?
Your currency. I don't know how many currencies you hold, but you know.
Personal, but yeah, sure.
Yeah. And all that in the hope that it's going to basically steamroll growth in the US, and his strategy is that's going to then roll on to growth to elsewhere. It's a risky strategy, right? At the same time, you know, the normal American, the Joe Blogs, you know, in other countries don't really get that other central banks have to follow. They have to follow what the Fed does. So essentially what all this means, to simplify it, is fiat currencies, as we know it, are going to devalue. And what does that do to something like gold, which holds its value? So think about things that hold its value. People are going to look and try and preserve value somewhere. And that's why you're seeing this almost insane. You hear me talk about markets, stock markets being unhinged. There's money flowing in no matter if bombs are dropping. And that is part and parcel of this holding of value that people want to keep safe somewhere. So that is why I'm saying gold, I'm increasing my exposure. If you're looking at like holding up to end of Trump term, I'm still bullish. If you're looking 3 to 5 years, I'm bullish. And I'll put that question to the gold godfather, who is going to be here for you. And here's going to be, I think, 2nd of September, Peter Hambro. Now,
Well, that's good to know. I didn't know that. I'm still here.
You gave me the week. You said most likely the studio refit will be done by then, so maybe 2nd of September will be a good time.
We'll discuss that offline. Let's move on to the next question.
Peter Hambro has been calling this bull run since gold was at 1,300, and look at where we are now.
Monkey Man, just noticed the advert where they're at tennis. Richard had his sunglasses and said, "Is he protected his bald patch?" I think so. No other comment from that. Realistically, I think it's probably pretty sure he knows it. But yeah, we'll move on to that question. Andrew Kelby, are we going to get any more DIY tips from Tom work from home? And Ange, funny enough, I had a conversation with Tom at the summer party.
At the summer rooftop party.
He's open to it.
Let's do it.
But we're going to try and convince them. So Tom, if you're watching, I'm going to be sliding in your team's DMs, and we're going to be trying to bring him back. But we'll see. We'll see. Because obviously, like, we're trying to show the platform how to use it. So the idea is Jolie basically shows how to use the platform as well, and Tom's great at the platform. So we're wanting to try and show how good the platform is.
Twitter friends, Andrew McKilvey, why don't you put on the chat right here if you want to see Tom back, because then we can put
Well,
that.
he was in the chat earlier. He was.
No, that was his doppelganger.
Is that not him though?
Well, I don't know, because it had a strange spelling. It's Hulme.
I'd assume
Did
that.
Rich meet someone at a trading event and was like, "Hi, I'm Rich McDonald. I'm Tom Wolstenholme," and Rich was like,
That's the first I've heard of that.
"Yeah," and then he said, "You're not like related to another Tom Wolstenholme in IG."
His surname is Work From Home.
This person on the chat, if you're listening.
Yeah. Next question, please. Or last question, actually. Steve Davies, SOBC has been mentioned in a similar vein to a Ponzi scheme on the Discord group. I've got an idea of what it is, but would welcome some of your thoughts if you'd be so kind. This is quite a big question, which, to be honest, I'm definitely not in a position to answer this personally. And do you want to share your thoughts? I mean, of course, everyone's got different opinions on it. It's obviously a British MicroStrategy.
I think you ought to get Pete Ward on.
I think what we'll do is, we'll get. I know Rich has obviously kind of shared a lot of his opinions, and I think anyone else who's essentially, I mean, your best bet is to watch the interview on the YouTube channel with the CEO. I can't remember his name. So I think if you watch that interview and you see basically what it is and you get more education about it. But yeah, I think I'm definitely not able to answer that question.
Boise asking a question I can answer. Did Tom ever plant a hedge? He did indeed. See, all you unbelievers that didn't think DIY was a big thing here, along with trading, here we are, because it's all about angles, it's all about technique. He did plant a hedge, because we're talking about hedge and hedging. Yeah. And he went for a laurel in the end, because I gave him all the different hedges, pros and cons, just like how you trade, pros and cons, or how you invest, pros and cons. And not only that, Boise, he did plant that huge lawn as well. He went to pick up his fresh grass, and he did it on
I think if we're talking about hedges now, I think it's time to go.
Yeah,
surely.
one of the hottest weeks of the year here.
Oh, bad year for it. Right, if we're talking about planting, I'm not going to hedge my bets anymore, and we're gonna move on. So, thank you everyone for the live Q&A, and thanks for having me as always. I'll be back on maybe a bit before the studio rebuild and all that, and then we'll do a bit of a nice little video for everyone. What we have up next is the. I'm sorry. I did bully people, and I really feel bad for it. But it's just unfortunately part of the job, and it was really aggressive. But it worked. You were watching the show.
It worked.
So it was a proven tactic, and I was being. So yeah. So yeah, thank you everyone. If you are new and you're still watching and you haven't subscribed, then I don't know what the hell you're doing watching 2 hours and not subscribing.
Come on, subscribe.
Please do.
Yeah.
But it's been a pleasure as always. We have got Decoding Crypto Part 1 up.
Yes.
Now we have played it before, but we've got Part 2 up. Basically, we obviously with compliance and everything, it's just taking a bit of time.
Yeah.
So we're now going to start to play out the series a bit more. So if you are interested in the product, then of course we'll start playing this. And then, next week, you're off.
I am. I'm not technically off on Monday. I will be.
But you're not on the show on Monday,
not on
but
the
you're
show.
off on my books.
Because for IG, only for IG, I am waking up super early, something like 4 a.m., to be prepped and ready for an hour on the BBC Wake Up to Money show. So that's where I'll be talking investing, talking markets, all things business related on BBC's Wake Up to Money on the 28th of this month on Monday. Then next week I will be in Dorset. In the tractor fields where I'm going to hopefully see green grass again, because the lack of rain has meant that there's no grass for the cows.
Well, I hope you have a lovely week off. So yeah, Monday, Rich and Andrew are off actually. So I've got a good job on my hands to try and do a show without you both.
It'll be the Phil show.
So that'll be the Phil show. At this rate, it might just be, I'll be filling time. So yeah, all right. I've had my time in here. It's getting a bit hot. So thank you, everyone. Have a great day. Stick around for what's coming up at the end of the show. And as always, we'll see you tomorrow.
Yeah, we will be here, bright-eyed and bushy-tailed, to slam your questions for us. And also,
we've done the questions. We're out of questions.
More questions. Those are Peter Hambro. Please put them here so I can get it in front of him.
Bye.
Bye. Hey, trader friends, welcome back. And we are talking crypto today with Ryan Grace, the head of Tasty Crypto, all the way from Chicago. He joins us right now to talk about this on a day when we have this brand new product. I'm sure you've heard all about it already. Ryan, how's it going?
Angeline, I'm doing well. Thank you very much for having me. And it is an exciting day. We've got spot crypto launching in the UK. What else could you hope for?
I know, right? I'm just bunging this on the screen for you, trader friends, so you can have a look here. But there you go. You can find this online, everything you need to know, and you can trade with us on the platform. So this is something that you are already au fait with, Ryan, because you guys have had it over your side for some time. I guess our traders are more used to, spread betting CFDs, and they want a bit of hand holding. So I often get asked, by some that are unfamiliar to this space, what is crypto? Give us the very sort of filtered, easy to understand version of this, because, to someone who is relatively new to this space.
Yeah, absolutely. So to take a step back, crypto really is this catch-all term that's used to describe everything from blockchain technology, distributed ledgers, tokens, cryptocurrencies. So there's a lot that fits into the box. But the way to think about crypto is very simple. Crypto is a technology. And what is this technology? It's internet money. And what do I mean by that? It's a way to transfer value on a network. It's permissionless. I don't need to go and ask the bank, can I do this? I can connect to the internet and I can transfer value across this network via blockchain technology, which is how it works, and cryptocurrency or tokens. That's the value transfer mechanism. So we can get into all of that. But again, it's very easy to think about. It's very simple to think about. It's a technology.
That's right. And I'm just going to whack up the platform just very quickly to show you our offering at the moment. This is amazing because, Ryan, as you know, it's, we've done this at speed and built it out for our clients here who have been asking for this for, a long while. I hold Bitcoin and Ethereum. And what I tend to say to people is it's a bit like an online token, right?
Yeah, I think so to some extent. There are so many different cryptocurrencies, and in some cases, you have meme coins, which maybe there's a community behind it, but maybe people just think it's fun. It isn't intrinsically worth anything. On the other side, you have Bitcoin, which the analog tends to be digital gold. And it's pretty compelling, I think, there's an argument at least around this, that it certainly is digital gold. And therefore, it has intrinsic value in that, well, you can transfer value, or it is a mechanism for doing so, across the network. So you have a couple different ends of the spectrum. You have a lot of utility that can be gained from some tokens. You have others that arguably maybe don't have that intrinsic value like I mentioned. So you need to understand and learn a little bit about all of the different tokens. But I think the best place to probably start is like you've mentioned. You've got Bitcoin and Ethereum in your portfolio. Bitcoin is the largest token or cryptocurrency by market cap. I believe Ethereum is second or close to it. So I would probably start with the larger market cap tokens, but you really want to learn about all of these because they're very different in the same way that when I go to the stock market, I want to trade shares. Well, they're all different companies.
Yeah, and they all have different functions, different, backgrounds, different ways of understanding that market and asset class. I often get asked, the whole crypto market, is it down to supply? Is that what is, holding the price up? There will only be, for example, 21 million reportedly 21 million Bitcoins. So it's, designed to be rare. Give us your thoughts on this.
Yeah, absolutely. So if we just stick with Bitcoin, there certainly is the scarcity element to it. And that's probably, where that direct relationship or that analogy between digital gold and gold, or Bitcoin and gold, comes from, why we call it digital gold. There's only going to be 21 million. I believe 19 million or so have already been mined. And it's very likely from the early days that a couple of million Bitcoin are unrecoverable. They've been lost. There is some risk with how you store cryptocurrency. And when you go all the way back to when this came to life, really back in 2009, 2010, you have the Bitcoin pizza story. People didn't know what this was, what it was going to be worth. And so you have people that have crypto on hard drives or Bitcoin on hard drives that have been lost. So all of that said, that is one of the primary reasons that I think people are interested in it. But you have to ask, why is that interesting? Well, that's only really valuable or interesting in a world where you want to invest in hard assets. And the reason why you'd want to invest in hard assets is because you're seeing the debasement of fiat currency, right? We know how indebted the US and many nations just around the world are. We know that we have slowing population growth, in some cases slowing productivity, and we have so much debt against that we constantly have to, when you look at the central banks, you look at government spending money, you kind of have to stimulate. And that monetary stimulus is debasement of the currency. And so we've talked about inflation. You look at CPI, you look at consumer inflation, but really it's more about the debasement of your purchasing power. And when you look at something like Bitcoin, it's very compelling because of that. And when you look at what drives this asset on the margin, it tends to be global liquidity, financial conditions. It tends to be central bank balance sheets, right? There's a pretty strong correlation between the expansion or contraction of the Federal Reserve's balance sheet here in the US and the price of Bitcoin. There are also some charts that you can point to if you look at money supply, or global M2. On about a 90-day lagged basis, and everyone can find this on X, we'll share this around, but on a 90-day basis, on a lag, there's almost a 0.95 correlation between the price of Bitcoin and what we see in terms of global M2. So when there's more liquidity in the system, there's more credit in the system, interest rates are zero, and we continuously stimulate this broader global financial system, there's really then a case to be made for hard assets. And Bitcoin, given its scarcity, like gold, is considered a hard asset.
We're also seeing uncertainty drive this, right? Each time we get, markets saw, as you saw in April, and to a certain extent early May as well, and this sort of erosion of trust in fiat currencies, that tends to also support Bitcoin, correct?
Yeah, absolutely. And I think it gets back to the point that we know if there's enough volatility in the system, or if things get bad, the monetary authorities tend to step in. I'll use the Federal Reserve as an example. I'm here in the US, but there is the Powell put. There is the idea in the market that if you have a large enough drawdown, Trump tweets enough, there's enough volatility that's sustained for a period of time, we'll be more aggressive in cutting interest rates, and ultimately we will be back to expanding the balance sheet through open market purchases. And that tends to drive all asset prices higher. That relates to asset price inflation. And when you look at the returns of Bitcoin and how volatile it has been, it's been a pretty good trade. It's been a decent performing asset, one of the best performing assets over the last decade. And, until that isn't true, that's something that people believe in the market. It's reflexive in nature. And I think that's one of the things that we do see. Now, it doesn't mean that crypto prices, when you think of them as risk assets, aren't going to be immune to short-term volatility. We've certainly seen that. We go back to some of the tariff announcements here out of the US, had a lot of volatility in April. Bitcoin had a significant drawdown as well, went down to about 75,000.
Yeah.
Has since bounced. But I think those are corrections that in this environment, you look to really take advantage of.
Just whacking out my chart here, Ryan is back up above the 104,000 level, and as you pointed out, it has had extreme, volatility, but it is, at levels, most people would not have imagined even, 10 years ago. It's quite incredible. Lots of people also watching us asking, how does crypto work? I mean, for example, I've got a wallet. How would you explain to someone who doesn't necessarily have a digital wallet?
Yeah, I think the easiest way, without getting into the weeds around the technical complexity, how wallets work, you have a private key, a public key. In some cases, you're in control of that. In other cases, it's held on the exchange. I can dig into all of that, but the way this all works is through a distributed ledger. So when you think about a blockchain network, it's a bunch of computers, a bunch of nodes. So decentralized computer network, it's all running the same code. The easier way to think about that, or like, what does that mean, is really that it's a spreadsheet in the cloud. All of the nodes on the network have the same version updated in real time, and it's cryptographically secured. So there's all the fun crypto details, but they all have the same version of the spreadsheet. And so that in itself is what powers cryptocurrency. Cryptocurrency is then a use case. It's an application of this technology. So we have blockchain technology, you have this network, distributed compute, and then a very compelling use case of the technology tends to be the ability then to transfer value on that network or to move it across the ledger. How do you do that? We do that with a token, do that with a cryptocurrency. So Bitcoin is a cryptocurrency. Bitcoin, and when we talk about it this way, we tend to use a capital B, but Bitcoin with a capital B is the technology. It's the blockchain network. Bitcoin, lowercase b, quite often, is the cryptocurrency or the token. It's the native token to that blockchain network, and it's how that value is actually transferred. Now, we price it in fiat currency, so as humans, it has value to us, but as the computers talk to one another and verify transactions, this is the cryptocurrency. It's what they pay each other in order to validate these transactions with. So I don't know if that's everything you're looking for around how it works, but I think because this is so complicated, sometimes it's easier just to start with kind of high-level concepts. But again, I think about it as a spreadsheet in the cloud, and the cryptocurrency is how you move value around or on that spreadsheet.
Well, Dylan, I guess it's you and me.
We're missing our host. We're
Don't know what
befuddled
happened there.
and confused as the two
Yeah,
panelists. As the two panelists awaited our host, who now apparently is gone missing.
This is my virgin endeavor on this show, and that threw me. So, hi.
So the only question is, do you have the ability to control the charts and the screens? I bet you don't.
Not even in the slightest bit. No. So it's gonna be a lot of talking until Chris figures out exactly what he did wrong.
Well, it's a pleasure to see you in public for the first time.
Yeah,
At least
this is
with
actually
me.
the first. This is the first time we've ever been on air together, and we've been working together since 2020, I believe.
I mean, longer than
since
that.
the 2020 election. Yeah, maybe, but I do know. I remember the 2020 election. Doing a bunch of stuff for that. So, I see. Mr. Vecchio has rejoined us. If that was a joke,
I'm back,
Chris. Well played.
Yeah,
I
good.
Appreciated that.
Yeah, no, not my intent. You got to love when the internet just flashes off here. I'm assuming that we're live and you guys are talking about the Google earnings that have just come out.
Well, we were just actually talking. We were waiting for you to arrive to tell us about the Google earnings because we don't have the ability to show the charts. So please tell us what's going on.
For those that are here, I suppose, welcome to the show. Josh sitting in for Ilya today, as he's previously explained. We have a market that's closing up here at all-time highs, and Google earnings are out, and they are better than expected. Google's beating EPS 231 versus 218. Expected revenues were higher, 96.43 billion versus 93.97 billion expected. Their cloud revenues, that's where people hide the AI, those are up 13.62 billion versus 13.14 billion. Here's where some of the numbers get funky. CapEx was up at 85 billion versus an estimate of 73.31. So Google down here slightly after hours. We were looking at a chart that was closer to 190 prior to the release. We touched a high just short of 196. We're now back down to 185. But let's go around the horn here as we look at this market, which an S&P closes up near all-time highs today. We tagged 6,400 right around the close here in ESU5. The NASDAQ lagging a little bit, but still strong, up 0.5%. The leader in today's session is the Russell 2000, up 1.46%. Buttressed by the good news that we have some trade deals coming down the pipeline. Last night, Trump announced that Japan and the U.S. have agreed to reduce Japan's tariffs on the U.S. to 0%. The U.S. will be employing 15% tariffs the other way. With the EU, Financial Times reported today that a 15% tariff rate across the board is coming down the pipeline. So markets, good news is good news. We're not going to get the worst of it come August 1st. So much for those fear Mr. Radigan. But I will say that bond yields were higher on the day, and the dollar was weaker, not benefiting from them. And that kind of throws me for a curveball for the sell-off in gold and pullback in silver related to the trade wars potentially coming to an end. I digress, though. We have a lot to cover here in today's show, and we have a new guest, Josh Fabian, who does not come on air all that often, but we had a need, and he raised his hand. So thank you, sir, for joining us in today's session. Dylan, you are the relentless bull around here, though, and you're the only one who's been leaning long stocks. So with that said, what's going right for this market that apparently I was clutching my britches over?
I mean, what's going wrong, I think, is the question. I think the what's going right is that everything the market is afraid of tends to be an illusion. I'm saying specifically with the tariffs and the economy, as evidenced by the earnings, is as strong as ever, and inflation is a basically known at this point. It's priced in. Tariffs are a known discounted item that's going to be less and less relevant as things move forward, and the relative economic strength is high, and the liabilities of the American presidency are being worn in the currency. They're not being worn in the financial markets. So I just don't see why the financial market, the stock market, the equities market doesn't continue to perform.
Josh, this is a market that's going up to new highs here. I'm waiting for those IBM and those Tesla earnings as well. So if anyone sees those having come out, please let me no here. I just said that, and they literally just popped up on my screen. So the devil listens sometimes.
Tesla or IBM?
IBM, EPS at 231. So let me just pull this up on the screen here, in fact, before we start talking about it. IBM out here. I would argue that it's looking a little bit soft.
Doesn't look good. Doesn't look good, Dylan, Mr. Optimist.
Let me find some of the deeper numbers here, though, because I want to see these flash across the
IBM,
screen.
I don't care about IBM.
Well, 231
IBM.
versus 265 expected on the EPS, but Dylan, it's still a company that makes $17 billion a quarter. It's not
I know,
nothing.
but it's not a bellwether for anything. It doesn't indicate anything.
Oh, okay.
Talk to me about Google. Talk to me about Tesla. Talk to me about Meta.
It's not part of the modern economy. I'll grant you it's not part of the zeitgeist anymore. But
all right, so go ahead.
Go ahead, Chris. No, I was going to say that you have the S&P trading at, I believe, about 22 times forward earnings, if I'm not mistaken, which is well above the 10 and 5-year average. So this market is priced for perfection. And I think you saw the ramifications of that last Friday when Netflix came out and, by all accounts, it was a stellar report and the stock sold off by 5%. So I think that, this market was giving you a hint then. It was a little bit frothy. And if you wanted any more evidence of its frothiness, you got back into this meme mania this week with, Kohl's. And yeah, that Kohl's taking off, Krispy Kreme. So I think that this market is starting to get out over its skis, maybe just a little bit, and say what you want about the trade deals that are all of a sudden coming to fruition. We're still, even at 15% on a lot of these deals, still 15% more than what we were at in January. There's inflation that's bubbling beneath the surface. There's structural damage in the job market. We're seeing even the jobs that are being created. If you just peel back the layers a little bit, you're seeing these jobs are in government, they're in education, they're in healthcare. And by healthcare, I mean like home healthcare. It's not innovative jobs. So
sorry,
it's not
Tesla. Let me cut you off there for a quick second. Tesla earnings just came out. EPS misses at 40 cents versus 42 cents expected. Their revenues were still $22.5 billion versus an estimated $22.64 billion. So small misses, but stock trading up here after hours because, again, Dylan, as we've covered here on the show in recent days, this has been so beaten down sentiment-wise. My own personal bias, as long as the company remains a going concern and it's not shutting its doors, it probably has a big discount attached to it, given recent events around Musk et al. Either way, though, Tesla EPS, again, slight miss here. Slight miss, 40 cents versus 42 cents expected, but stock trading higher here after hours right now. Josh, you were saying before I interrupted you.
Just that, you have these macroeconomic issues that, need to be considered. But turning to Tesla really fast, I'm interested in what they have to say. I think the risk here is that this brand has been politicized, and was it the investor disclosure risk or first time investor disclosure risk for SpaceX?
Yes, that came out yesterday.
Yeah, that they acknowledge that Elon could potentially return to politics, which I've never heard of that before in a disclosure risk for a company. So that really caught my attention. So I think that, there's some questions about this company, and let's see what they have to say on their conference call. What he specifically has to say on this call. I think that people want to hear that he's dedicated to this company. Not only that, but also what are the implications going to be for the lost subsidies moving forward?
Sure. Tesla here. I know that we had Mr. Westwater that was still leaning long vis-a-vis the short put spreads in Tesla. Those would be working out well. Dylan, other side of these earnings, obviously we want to hear what Musk and company have to say, but this is a chart that feels like it's coiling and ready to explode. Is this the moment where we see Tesla finally take the baton and help the NASDAQ stretch its legs to new highs?
Maybe. The problem is Tesla's not performing based on its quarter. It's performing based on, the sort of the ever changing perceptions of the future value of the company through the lens of this Muskian empire. And that's an almost impossible thing to price. I mean, for sure it is set up to make a run, but whether it happens right now, I don't know. I do think that it's good. I think the more time that passes between the period of time when Musk is super high profile in the political sense in the Oval Office, just all over everybody's television, and the less public he is and the more he does not exist as a public figure, and the more he just exists as a semi-normal CEO, the better off I think the stock will be. I think that just booking a couple of quarters, putting the, like I think I mentioned this yesterday, but just putting the half-life of the politicization of the company in the past, and allowing the company to become more and more what it is as a company, as opposed to having it be a proxy for Musk's political activities. And so I think just getting the quarter well behind, now getting 2 quarters well behind, I think is very valuable in this context. And so I think that that's actually the most important thing, is just adding time.
Time solves all wounds, as they say.
Mm-hmm.
And getting more time between his stint in the administration and today could be helpful. Certainly from when he left in May, at the start of May, we know that he's going out the door. The share prices are up for what it's worth. So Elon Musk leaving government hasn't been bad for the share prices. But Dylan, it still feels like a late April environment where going into earnings, the stock price wasn't following the rest of the Mag 7 complex. And as bad as the earnings were, they weren't as bad as a lot of people still feared. So 336.64 here. The share price is closed at 332.56, so slightly higher after hours. Josh, I mean, we can complain about the market feeling overvalued. CTA positioning now is in the 90th percentile. As Dr. Data pointed out today, similar peaks in allocation. Let me just pull this up here. Similar peaks in allocation. Late 2014, early 2018, late 2020, mid 2023 have often been followed by declines, although not always immediately. This can be interpreted as CTA as being potentially vulnerable to reversals after building up large long positions. So I have my misgivings about the market feeling a little crowded right now near the highs, and I think the data supports that as well. But could this just be a case of rebalancing, right? Tesla just goes up and then this market has another 5% in it. We can't ignore that possibility.
Yeah, I mean, yeah, absolutely. The thing that scares me is when you start to see these meme reactions. That to me is the desperation of people saying, you know, this rally was talked about anywhere you looked as the most hated rally ever. And then it was the rally that nobody wanted to buy. And they were just, you know, and eventually that frustration built up. And I think what you saw was it culminated in the meme stock frenzy. I didn't see where any of those meme stocks closed today because, quite frankly, it was just too aggravating to watch. But that's the type of stuff, that type of behavior is what really makes me get a little bit concerned that, hey, you know, when we start throwing, you know, before the market had even opened this morning, I think it was, was it Open had already traded like 7 million shares. One of them had traded just an astronomical amount of volume. It's like, okay, it's not a casino. And when we start treating it like a casino, bad things happen. So yeah, can we run up another 5%? Absolutely, 100%. But are we getting a little bit careless? Yeah, I can make a pretty good argument for that.
But I mean, by that, can't you make it? Are we been careless for a decade by that measure? I mean, I just feel like the market is indifferent to negative information, but for a week or two.
Sure, that's a fair assessment. But I also think at some point, people do want to take some profits. So I don't think we're in danger of a 20% correction. I'm not arguing for that, but can we see a 5 or 10% correction? It was around this time last year that we saw something like that when you saw the the yen carry trade come off. So I think this market's been kind of reckless going back to 08, 09, when we saw the quantitative easing. So I would agree with you on that. I just think that, at some point people start to say, wait a minute, this is getting excessively reckless. Maybe we take some profits, just enough to scare the children. Then we jump back in and we get reckless, but not so reckless that we can't justify it.
There's we talk about getting reckless in this market. I'm not surprised. Dylan, we called this out on Monday that we were going to see some of this action. We flagged the share prices of RKT, Rocket companies, as a potential place to look, given its very extreme short float, sitting right around 50%. It topped in the market overnight. If you look pre-market on the 4-hour time frame, this hit a high of 1970 overnight before coming back in. There's a difference between like meme stocks rallying, like the Palantirs of the world and the Oklos and the SMR, names that are attached to thematic ideas that you find in FinTwit, like nuclear is going to be the next big thing. And then there's when like the crap starts to rally and pigs fly. And this feels like a pigs fly environment. But is that all that different than what we've seen in recent years?
No, that's kind of my point. That's why I feel like oddly bullish compared to you, because all of a sudden you're saying you don't like the quality of the names in the rally, as if the quality of the names and some of the activity of the last few years was anything particularly impressive. And I just don't understand what. I still am a little bit perplexed as to why you're more cautious now than you were in previous moments of effervescence. I'm not saying the market's not effervescent. It's obviously effervescent. I'm just saying I've never seen you view the effervescence with such a cautionary perspective.
I think 3 years in a row I've lost money being long the market through the summer.
Got it. So it's just the seasonal. It's the seasonality. You're like, I'm not doing this again.
I mean, July 22, the market went up a little bit, but I was leaning long then, and it came right back down by the end of August and still headed lower into September, October that year. We got the pullback in July 23, which culminated in the lows in October and November. But then again, great time to buy. Last year, we were dunking on Mike Wilson, the Morgan Stanley strategist, who has a knack for flipping sides at extremes. And sure enough, when he flipped long last July, that was pretty darn close to the top. So, unfortunately, I did see his research note for his second half outlook, Dylan. I just saw it today that he's calling for a pullback in August and September now. So it feels like
research.
Well, no,
and you're saying your operating principle is to actually be contrary to him.
For the last few
years, that you would prefer to be contrary to him anyway. You would not. Your first choice is not to be on the in alignment with Mr. Wilson. Is that what you're telling me?
He's a pretty interesting timing tool, is what I'll say there. But listen, if this market's going to keep squeezing, there's two things to keep an eye on, and that may mean adding a sprinkle of more upside to counterbalance some of the late August puts that are being held, and maybe even those need to be rolled up from my point of view. But I see a NASDAQ here with a top side of the range of 23,100, give or take a few points, then up to about 23,400, give or take a few points. A breakout would call for a 300-point measured move on top of that, and looking for further squeeze into the end of the month. We look to the July 31st expiration. We would add 300 points to that, 23,700, short the 23,800. It could be in the neighborhood of a 4-to-1 risk to reward trade. Not dissimilar from what was just done the last time the NASDAQ longs were taken, when it was looking long the 23,350, short 23,500 call spread. That was closed out earlier this week. This may have been the dip opportunity to buy, Dylan, right? We pulled back to former resistance, turned support, and now we're rallying. But the measurement still calls for an additional 300. And so I look at that and I look at the Russell here, which this guy's been trading sideways for the better part of the past few weeks, and it may finally be breaking out itself today. I think even Ilya would agree that we've broken horizontal resistance here, having closed above the previous cycle high. Not just the closing high, but the absolute high. So a Russell breaking out and an S&P hitting an all-time high and a NASDAQ sitting right there and surviving Google and Tesla and those very important IBM earnings. Why not squeeze up a little bit more? Why not keep the party going for another week or two? So why not keep the party going for another week or two? Send it.
There you go. That's
filled.
my boy.
Let's get back on.
Boy. There we go. I don't know
Dylan, you're
what was
right,
going
though.
on.
I don't know what's going on either with me. Maybe it's like it's my birthday, so I'm feeling a little more conservative.
Today's your birthday?
No, last week. But it was like I'm feeling a little more conservative here.
You're losing your. You need the eye of the tiger, man. We need to get you back in the ring. We need to get. You need to start doing some pull-ups, some push-ups. So you to get your confidence has been shaken.
He needs sprints still.
Sprints and push-ups.
There was something romantic about the idea of the seasonal peak of the market this year falling on my birthday, and it's like I just can run this up long until my birthday. Blow up some balloons, and then the market will go pop on the other side of it. Like that. That seems like I'm the main character kind of syndrome. So probably
just sort of self-referential.
Yeah, very main character syndrome.
That's what you consider romantic. That you tell your wife that. Isn't this romantic?
I whisper sweet nothings. S&P is going to 64. We're back.
Tesla's pulled back a little.
My boy is back in the game. Enough of this nonsense.
I feel a little
Here we
bit better
go.
about my little short position here.
Dylan, isn't the ethos that the Trump tax bill is funneling all this money from the bottom to the top? The bottom 80% are getting tax hikes. The top 20% are getting a tax cut. The top 20%, they don't throw money back into more blue jeans and knickknacks or trinkets. They
goes into
invest
assets.
in the market. Goes into assets.
Yes.
That's the macro trend.
And the tariffs are not going to be that bad.
They're going to be bad. They're still going to be bad. It's just it's going to get passed. It's going to get passed on to consumers. We were talking about this with Westwater earlier today on Futures Power Hour. Target just announced that it's no longer going to do price matching with Walmart or Amazon. And Dylan, was it last week we discussed this on the show? How if companies are going to pass on price pressures, it's really a three-stage effect. First, they negotiate with their suppliers, try to get them to eat the costs. If they then have to think about ways to pass it on and to maintain their margins, they start cutting promotions. They start cutting sales and discounts. And then they go into their revenue management tactics of raising prices, hoping that the volume down is offset by the prices up, and they can come out on the other side with their margins intact. And so Target's announcing they're ending their price matching with Walmart and Amazon. That's a phase 2 signpost, which means phase 3 probably comes in a few months. And at 14% of US GDP, just thinking about the math here, imports are about 14% of GDP, assuming no impact to exports, increasing the effective tariff rate from 2 and a odd change percent, 2.3%, up to 15, maybe 12 with substitution effects. Still talking about a percent decline on the high end of GDP over the next 3 years. Still talking about prices up a little bit more. But as we've seen over the past few years, tariffs haven't hurt this market. We've had tariffs in play and the consumer just adjusts and just keeps spending. Maybe this time's different. Maybe it's not. So wrong to get bared up the past 2 days. That's all I can say.
There we go. Now we're talking. You still have your insurance policy from the other day, so you're not just brazenly and nakedly long here. You still have your little backup plan. But the underlying issue is massive flow of resources due to the Trump tax bill into the economy. It will all go into assets, and there's no sign of real economic weakness despite inflation, despite the tariffs, despite anything. Any indication of relative economic activity is favorable. And so I just don't see how you don't sort of hang on to all those things and just enjoy them.
Josh, are you going to stop worrying and learn to love the bomb like I have frequently done?
Well, I don't understand any of those things that you just explained with the 3 stages of grief or whatever that was you're talking about. I mean, I tried to follow. But I do know that when GM announced their earnings, they talked about eating over $1 billion in tariff costs, and next quarter being between 4 and 5 billion, and that seems like a pretty big number to me. And I understand what you guys were just talking about and the flows of the tax bill benefiting the wealthy, and they're going to put that money back into assets, and how that sounds so great. And it's when everything sounds so great that I get that's when you start looking around. Like whenever my health is really good, that's when I get nervous, right? That's when you know something is about to happen. And again, I'm not saying that I think this market's due for some sort of like massive correction. It's just, it seems like it's frothy. You know, my trading view is pretty much like 15-minute increments. Like I want to like put on a position, go get something to eat, go to the bathroom, come back and be out. Like that's my window of trading. I'm not a patient person, ask my children, but it's just, you know, the way the tax bill is set, the way that the entire tax bill is set up is absolutely going to benefit wealthier people. They are going to invest that in assets. Logically, that should be good for the stock market. They are going to be buying more assets. You know, whether or not it plays out that way, you know, we'll see what happens. But when you try and make a logical argument with a stock market that can be, you know, incredibly irrational, I think you're asking for trouble. So again, I'm not looking at like we're going to crash, but I just think that we've had an amazing run. Let's just be rational for a minute. You know, we've had an amazing run since the April lows. At some point, people are going to say, yeah, it's a lot of money I've made. Maybe, you know, I do still want to get my daughter the $12 for Christmas or 70 pencils or whatever the hell it was he said. So I'm going to take some profits and buy that.
The macro level sector rotation here continues to hold up. That's been one of the guiding posts that I've had, Dylan, as you know here. You're on this boat with me every day. When you have technology, industrials, finance, cyclicals, these are the bull market types of thing that's happened. Today, energy, healthcare outperforming. Maybe that's a sign of the economy being a little bit better than we anticipated. But generally speaking, right, financials here, at this level, this is going to be the second highest weekly close ever for financials. For industrials, this would be the highest weekly. In fact, today is the highest close ever for the industrials ETF. Telecom, highest close ever. Consumer discretionary has finally turned the corner, right? It was really struggling to get back through that January swing low. And when it does, this is just beautiful price action. Put it in a textbook. Resistance becomes support. And then we lift off. Even semis, Dylan. Semis have been the backbone of this entire rally. And today, after falling into their 1-month moving average, as we highlighted on the show yesterday, that's why those boxes are there, we bounced from the 1-month moving average. Again, it's an inside day after 3 days of decline. You'd call that the end of the decline for the time being. We have a level to trade around near 281. We're running it hot. Where is the best opportunity, though, in this stock market, Dylan? Is it getting crypto exposure? Is it semiconductors? Is it buying the stuff that's been lagging now and playing catch up? Is it YOLOing into Rocket and Open?
Well, let's just go down the asset list. I mean, let's assume that you're going to have sort of incremental new dollars looking for a place to go from the wealthiest people in the world. The obvious place for that money to go is into bank stocks, tech stocks, and crypto. I would say would be the three sort of Bitcoin, the Mag 7, and the big banks. who benefit the most, I think, just from the sort of flow of money to the rich from from the Trump tax bill.
It's hard to disagree with that, Josh, as we think about not just short-term trading, but long-term portfolio construction.
Yeah, I would agree with that. I think you left out shoe companies. But yeah, I would agree with that for the most part. What I don't get is your optimism on like, haven't you like taken like an 18% hit or something just living overseas in the
No, but I try not to
dollar.
listen, this whole situation has been a personal financial catastrophe, the likes of which I've never endured. But I try not to bring my personal issues into the overall discussion, because I believe most people live in a single currency world and they're oblivious to the total annihilation of the US dollar. I don't have that luxury because fortunately, I have half my income in euros and half in dollars, but the dollar half of my income has been reduced by 20% this year. I've taken a 20% pay cut this year. But I just think that is such a tiny percentage of the world that even has that awareness. And so I think that, and in fact, because the dollar is declining so horrendously, I actually think that's why the stock market continues to perform so well, because the penalty for the Trump administration is not being incurred in the U.S. stock market. The penalty for the Trump administration is being incurred in the U.S. currency. And so it actually allows the U.S. stock market to perform much better than it otherwise would, because of the abomination that is this U.S. dollar chart that my dear friend Chris Vecchio has no choice but to remind me of as I look at the catastrophe that is my personal income.
But aren't you worried that could be contagious?
Contagious for what? I mean,
the currency decimation that could spread to the euro.
I mean, by definition, the euro has to be stronger as the dollar gets weaker. In fact, there's no greater.
But couldn't there be some degradation to the euro, some improvement to the dollar, but overall net, both currencies end up taking a hit as a result
in favor of what? The yen and the Canadian dollar?
Maybe it's crypto. I don't know.
But what alarms me here, this is again one of those signs. Ilya loves pointing this out all the time. But volatility in the currency market had crept up in March around these tariff headlines, and it started to rally again in early April, started creeping up again in early April once the tariffs went into effect. And the IVRs in the currency market they're up there once more. 46.2 in the euro. You go over to the pound, 50 even. Canadian dollar. Fix you. Canadian dollar, 58.2. Japanese yen, which is a real pita for me, although it's only up by 0.04% today, only a 14.3. When the world's largest currencies have volatility that's trending higher, and this is the deepest, most liquid portion of the market globally, it always raises an eyebrow. Makes me think that things are a little bit less stable and sturdy than they appear to be. But I'm trying to make heads or tails of today's action. We talk about the buy America, sell America dynamic here frequently, Dylan. Buy America would be stocks up, bonds up, dollar up, gold down. And sell America would be the exact opposite. Gold up, and then stocks, bonds, and the dollar down. Half that equation's in check today. Stocks are up, gold is down. Buy America. The other half is not. Bonds are down and the dollar's down. So how do we square the circle here? Is the stock market's jubilation over the news flow over the past 24 hours, is that the tell, or is the bond market?
But I think you have a different fundamental issue, which is the credibility of the U.S. government and U.S. currency is at an all-time low. And so I think you cannot underestimate the degree to which the risk and the penalty for the catastrophic American government is being jammed into the currency to the benefit of the U.S. stock market. That the traditional sort of strong dollar, strong stock, the sort of strong America, like it's a weak America, a weaker than ever America, right? Thus the catastrophic weakening of the currency that's then allowing for what amounts to an inflation offset. On a dollar adjusted basis, are stocks up at all? They're probably down, on a dollar if you're a euro investor.
That's yes. That's still true.
So I just still think, I mean, I can obviously be wrong, but I just think that in this situation, it's not a traditional buy America, sell America, long America, short America situation. It is how do I say it? It's a America in decline, but the decline is based on a wealth transfer to the wealthiest Americans, which benefits the stock market and diminishes the currency. Like the reason for the decline is because what's left of the money is all being given to the richest Americans so they can jam it into the stock market. And so on the one hand, you're like, oh, this is not a well-run country and the currency's lost all credibility. And rates are coming up and inflation is a risk and all that jazz. And at the same time, the reason or one of the reasons that the economy is doing or that the currency is in such jeopardy is and that the countries that the integrity of the country is in such a compromised position is because there's a short-term phenomenon of raising taxes on the lower 80% and cutting taxes for the richest 20% so they can jam it into the stock market.
Josh, you have anything going on with rates here? It's not a really.
I'm trying to get my head wrapped around it because I'm in the same boat as you. I have a hard time, initially when I was thinking, rates are, we can't cut rates, they're going higher. Then we had this bit of a reversal this week. And was it signaling that, a recession? Was it some sort of a recession indicator? I can't get my head around what exactly is going on there. I think what Dylan just suggested makes a lot of sense as well. I don't have a position in bonds. I think right now bonds are in no man's land. When they get down around 112 handle in the long bond, I find them attractive and I'll buy them there. But right here in this 113 area, I don't have a position. They're of no interest to me right here.
I mean, I'm still trading them directionally neutral, so just a little bit of jostling. I'm hoping for theta decay. That's the name of the game. That's it. We just need this thing to continue to bounce back and forth, both in notes and bonds. So I suppose that's not disappointing. Silver today did pull back after stretching to new highs, although we look at that 4-hour time frame, and I'm going to squint and say that we're trying to hold up here. That's why I rolled out of my SIU 5 contract today with 34 days to expiration. I noticed the market was up 0.5% earlier, and I just wasn't making any more money on the position. Right? It should be I should be making hundreds of dollars on a 50-cent move in silver, or 0.5% move in silver, like 15 cents. I should not be making like $75. So I got out of the 38.39 call spread, 34 days to expiration. I went out and looked at what was happening in October, Dylan, and I couldn't help but notice at 64 days, the long 42, short 43 call spread was a max loss of $1,255 at 30% probability of profit. But by just going out to 97 days, that same 42, 43 call spread, it was only $1,370 risk with a 33% probability of profit. And I said to myself, is risking another $120 or so worth another 33 days in a trade from 64 to 97 days? Is it worth $4 a day? And the answer is yes. It's worth $4 a day.
I would think it is, yes.
Yeah, I think it's worth $4 a day to size up a trade where it's still potentially in the neighborhood of like 2.5, 3 to 1 risk to reward on a 33% probability of profit. Looking for the SIZ5 contract to go up there on our charts. We're talking about a move that would extend to the extension here. Swing low, high, low, sweet chariot, and that pulls you into 4150 as a start, as a near-term target. So you get to 4150, you get some vol expansion. These calls go up a little bit in value. Take them off. You get a pullback, put them back on. It's kind of how I intend on playing it. But having long-term exposure to silver, Dylan, as you know, for the past 2 years has been wonderful. So I'm not going to say we're going to corner the market, but this seems like an opportunity to extend duration to buy ourselves a little bit more time, not expose ourselves to a potential pullback like we saw the last week as we get closer to expiration, which takes a lot of our gains off the board. Position management is prudent at the end of the day. So yeah, I'm looking for more gains here, but made a slight switch, an extra $120 or so to get another 33 days in the market. Seemed like an easy decision where to lay out the next trade. Can I entice you into getting into silver with me?
Yes. Yes, you can. Yes,
Wow,
you can.
easy.
I mean, just especially with the dollar gone straight to the in the ditch. You know, what am I left with at this point? I'm never going to buy gold. It makes me, I don't even like gold. And also all I'm left with is silver. So hell, I'll buy some silver.
You're not a buy gold, wear diamonds kind of person as an investing strategy?
No, but maybe I should be.
Maybe. Josh, what are you doing in the metals here? Today wasn't a great day for
I
gold
find
traders.
the metals to be so frustrating to trade.
Mhm.
You know, I've been trading. I started investing when I was 14, I think. Yeah, 14. So I figured out what my tolerance is, what my patience is, and I find metals to be like green vegetables. Like, just not my thing. Just, they don't do anything for me. Silver in particular, I just seem to have the worst timing with, so I don't have a position right now in silver. I actually am looking at it right now. I keep it on my screen and I watch it, and I use it as part of just an overall market awareness piece. But I don't really do too much in it. Same with gold. On a rare occasion, if I think it's in an extreme, I might take a position. But no, I haven't. I couldn't even tell you the last time I had a position in silver actually was the end of last year, and it didn't work. And I swore I'd never trade it again.
I'm on one of those stretches with natural gas right now. I was in some short put spreads. They were working, then they didn't work, and so I got out, and then the market rallied back, and I felt like an idiot, so I decided to go directionally neutral. Now it's down like 10% this week. When I go into the stretches, I find it's a good time to step back from the product. Just personally, there are some things where if like I try to, I put on some like test trades sometimes. I'll paper trade some things just to watch the market, and if I can't if I can't back test this, including fees and what have you, and not just assuming like there's a zero bid ask spread, which is one of the shortfalls that a lot of back testers do. They don't think about the cost of actually executing their trade. If I can see that it's working out, I may then start to put some capital into an idea. But there are other times where it's like if I get out of the market and I'm with natural gas, if this is a loser for a second time in a row, I'm going hands off for 2 to 4 weeks. I'm not going to touch it again. I just need to let it drip away from my mind, from my mental map. I need to forget my biases that I see when I look at the chart. I want to forget about the fundamental data with inventories and tariffs and just kind of allow my mind to reset for the product. I think that's typically helpful. And I think people should.
I can hold a grudge with the best of them.
But the point I'm getting at is I don't think people should hold a grudge. Just give yourself a reason to back off. I know some people who like just absolutely eschew certain products. Fine. Natural gas is hard to turn away from myself because of the volatility here. It's one of the few things with an IVR north of 60 right now in the futures market. And that's our lantern. So we're drawn to it. I digress though. Gold here, big pullback today. Dylan, I know that you're not a big gold guy, but in further, respect to our missing Soviet friend here, he would probably argue that this diagonal trend line doesn't matter at all. It's not a false breakout to him because we never really did break out. We never cleared the June 15th high. But the horizontal support here that you see through July 11th, that you see on July 16th, right near 3290, that didn't break down today. So consistent with that view, as someone who is leaning long gold right now in the GCV4 contract, if we see GCQ5 break down below 3390, that sets us up with what I would then consider to be the classic false breakout, return to the other side of the consolidation. 3225, look to get long again there or ride it short down. But either way, I again, at a crossroads where for at least gold, if we're going into this frothy environment, it's a catch-up time. and silver and other metals probably catch up more than gold, which has been an absolute monster this year. You're not a gold person, but does this chart stick out to you? Is it interesting to you that gold didn't break down in a more significant manner today?
Yeah, I mean it is. I mean, and I think that if there was a time to buy gold, this looks like a darn good one. I mean that this is of everything that gold has done. This to me is actually the most interesting thing that I've seen since we've talked about it, just because it's performed so well for so long, and it does have that sort of big downdraft in it right there, which seems like more of an opportunity than a liability.
More of an opportunity than a liability. It's interesting that you say that this is a good spot because we are technically near support. So let's say we wanted to swing something against here. Doing it in the gold futures this time of day and even when the market reopens could be a little difficult. But considering this is a scalp swing trade, you could go in to MGC where your tick value is $1, full point multiplier is 10. Okay. At 33.99, we'll call it 3,400. We're risking $10 on a potential trade in the MGC contract, risking $100 in GC. I think that's reasonable if you want to just swing this directly through the futures. If you're going to sit on top of it overnight, hold 33.90. That's your support level. You got something to work with tomorrow to scalp around. Below 33.90, you take your dollar tick loss. Tick size is 10 cents. So you're risking $100, you're risking $1,000, like whatever. The point is that there's a way to approach this here that doesn't need to be through options right now. It's feasible if we got to think about trades for the second half of the week. 33.90 is a level to, 33.90, 33.75. It was resistance. We can trade around there. Josh, what's the most important theme that you're looking at in the market? I think having someone like you on the show is really interesting because you're not necessarily on air or in front of the camera. You're one of the people who pulls the levers and makes the rest of us look good. So you have a different, the point is you have a different relationship with the market, right? Than either Dylan or I do. What's your perception here? How have you digested all of everything that we've talked about that you hear Tom and Tony talking about on camera?
I do have a different take, I think, from most of you guys because I do spend an awful lot of time scalping. Part of that is my personality. Part of that is because my daily activities at work require a lot of time. And so, I try and just get a position on and off quickly when I have a minute. So I'm looking at things in a very finite time period. Like I said earlier, I do like to take a look at things in a bigger, I'm engaged in a macro, in a political, geopolitical level. So I have opinions about things overall and where we're headed. I certainly have convictions about what's going on in the market and where we're headed. I've said a few times, I think that equities are frothy. I think bonds and interest rates are trying to figure out just exactly where they want to head, what's going on with the Fed. I think that I don't think Powell's going anywhere. But I did hear an interesting perspective earlier today from somebody that they thought he should resign. Because what does he have to lose by resigning? I mean, at this point, it's okay, fine. I'll leave, have it your way, and it's on you. If I leave and you bring in somebody and he cuts rates and the markets respond positively, congratulations. But if I leave and you bring in somebody and they cut rates and the market takes a shit, well, that's on you as well. And it's kind of calling a bluff type of move. I don't think that's necessarily going to happen, but it was an interesting perspective. I think that inflation is even with these trade deals, which, to be very blunt, we haven't seen the details. We've heard
the White House actually just released a statement saying that any discussions around a possible EU trade deal should be considered speculation.
They're all I'm sorry, they're all bullshit. Okay, you know, he mentioned the deal about Japan last night, and you know it's going to include agriculture and other things. Well, that's very hard for me to work with. I want to see
like the
actual,
Boeing. They're going to buy 100
Yes.
Boeing planes. Is that over the next 5 years?
Exactly.
Is that over the
There
next
has not been any
40 years?
details on any of these things, you know, and you know, great that we got to deal with, you know, some of these smaller countries, but the countries that we actually trade with, let's get some details, because until we do, as far as I'm concerned, August 1st is problematic for this country. It's going to be a shit show. So, you know, I think that I think equities are frothy to begin with. I think that inflation is a week away, give or take a couple days. And it concerns me. We're about to embark on a course that we haven't gone down, with maybe the exception of Smoot-Hawley. I mean, you got to go back that far really to see like excessive tariffs, and that didn't lead to a good place. So I'm a bit pessimistic, obviously politically, if you haven't picked up on that, but also on how that's going to affect us economically. I think that I don't see what was so wrong. I mean, there's certainly economic disparity and those issues, but the policies that we're enacting right now, they're not going to work. Trickle down economics just doesn't work. There's just so much evidence that it doesn't work, and we're just going knee deep, a little higher than knee, a little lower than
neck
waist.
deep. I think we're neck deep, Josh.
Neck deep. Thank you. Neck deep. It's like, why are we? It's not going to make. It's going to make things better for the
It's going to make
Toms
the
of the
stock
world.
market go higher. It's going to make the stock market go higher, bro.
It's going to make the stock market go higher, but who's that going to actually help? I mean,
Nobody.
When I started investing, the first stock I ever bought, I'll never forget it, was Pillsbury. And the stock was trading about $28. And that wasn't an unusual price back then. Today, you can't find a stock under $100 to trade. Who can afford that? So, you know,
Listen,
it's the stock.
We have the America has been split into two.
Yeah.
The haves and the have-nots. The president works for the rich. Everyone else can go to hell. But if you're going to be involved with the stock market, I mean, listen, as you know, I took a massive moral position 13 or 14 years ago, and a lot of good that did me. So I just think that at this point, if you're going to be, if you can not play, but if you're going to play, you're better off to play and just play along with the scam that it is than to live in some sort of moral conflict with it, which is only going to prevent you from making money.
Yeah, but you can look yourself in the mirror, and I have respect for that. So, listen,
you guys can see your reflection in the mirror? Something's wrong with mine.
Listen, I can be completely wrong, and I can accept that. And I want the country to do well. I want these policies to work. I've done my homework. I've spent the time doing it, and I have a very, you know, what I would consider to be a pretty educated opinion on it. So, but again, my time frame for trading not that long. So, I mean, I've done like 4 or 5 trades while we've been on there already. They haven't worked out particularly well, by the way. I was kind of expecting Tesla and Google to shit the bed, and they didn't to the extent I was hoping.
You know, Joshua, I'm looking at this S&P 500 contract here, and I'm listening to what you say about doing the work, and you sound like a real nerd. No offense. So we're going to...
By the way, I was like 2 points away from getting out of my cruise trade, and then I just turned and went the other way, and I had to have my 2 more points, and that's the bane of my existence right there.
I'm like that all the time. I'm with you. If we were to take an extension here, the swing that we have on June 22nd, highs mid-July, and then back down to the low on the 16th, that gives you a 100% extension at 6675.75, which would be a heck of a run here if that were to actually transpire. But thinking about that playing out, if we want to go run it real hot, this is the run it real hot trade, 66.75. I mean, that's not even outrageous to get there by the end of this year, guys. We're talking about plus or minus 500 points into the end of the year priced, and ESZ5 is trading at 54.62. Getting to 7K is not out of the realm of possibility. That's the 1998 playbook, Dylan. Right? We chop around here for the next few months. We don't have a really big pullback. And then this thing takes another gigantic leg up. And like we're closing the year 67 to 3,000. Gosh, it could happen. I can't believe I spent 48 hours doubting the sanctity of this market.
Thank God you've come back to your senses. I was deeply confused.
Was that an adopted baby if it did it? Is that the sign that it would make on the chart? Then is that an adopted baby?
These technical terms. I call you a nerd. What am I?
Show me a ninja star. What does that one look like?
3 counting
crows. You guys have all your
crows.
technical analysis.
We close out the session with stocks at highs. This is going to be a new closing high for the NASDAQ here when the futures market officially closes at the top of the hour. 23,411. S&P 6406. Mission accomplished, gentlemen. We'll be back tomorrow because overtime is out of time. Thanks for tuning in. Overtime is on every Monday through Thursday here on Tasty Live, 4 p.m. Eastern, 3 Central. So be sure to come back for it this Thursday to finish out the week. For Josh Fabian in somewhere close to Wisconsin, Dylan Radigan, parts unknown. I've been Chris Vecchio in New York. Good luck trading. See you soon.
Well, Dylan, I guess it's you and me.
We're missing our host. We're
Don't know what
befuddled
happened
and confused as the two panelists. As the two panelists awaited our host, who now apparently is gone missing.
This is my virgin endeavor on this show, and that threw me. So hi.
So the only question is, do you have the ability to control the charts and the screens? I bet you don't.
Not even in the slightest bit. No. So it's gonna be a lot of talking until Chris figures out exactly what he did wrong.
Well, it's a pleasure to see you in public for the first time.
Yeah,
At least
this is
with
actually
me.
the first. This is the first time we've ever been on air together, and we've been working together since 2020, I believe.
I mean, longer than
since
that.
the 2020 election. Yeah, maybe, but I do know. I remember the 2020 election. Doing a bunch of stuff for that. So, I see. Mr. Vecchio has rejoined us. If that was,
I guess I'm back,
Chris. Well played.
Yeah,
good. Appreciated that.
Yeah, no, not my intent. You got to love when the internet just flashes off here. I'm assuming that we're live and you guys are talking about the Google earnings that have just come out.
Well, we were just actually
show.
talking. We were waiting for you to arrive to tell us about the Google earnings because we don't have the ability to show the charts. So please tell us what's going on.
For those that are here, I suppose, welcome to the show. Josh sitting in for Ilya today, as he's previously explained. We have a market that's closing up here at all-time highs, and Google earnings are out, and they are better than expected. Google's beating EPS 231 versus 218. Expected revenues were higher, 96.43 billion versus 93.97 billion expected. Their cloud revenues, that's where people hide the AI, those are up 13.62 billion versus 13.14 billion. Here's where some of the numbers get funky. CapEx was up at 85 billion versus an estimate of 73.31. So Google down here slightly after hours. We were looking at a chart that was closer to 190 prior to the release. We touched a high just short of 196. We're now back down to 185. But let's go around the horn here as we look at this market, which an S&P closes up near all-time highs today. We tagged 6,400 right around the close here in ESU5. The NASDAQ lagging a little bit, but still strong, up 0.5%. The leader in today's session is the Russell 2000, up 1.46%. Buttressed by the good news that we have some trade deals coming down the pipeline. Last night, Trump announced that Japan and the U.S. have agreed to reduce Japan's tariffs on the U.S. to 0%. The U.S. will be employing 15% tariffs the other way. With the EU, Financial Times reported today that a 15% tariff rate across the board is coming down the pipeline. So markets, good news is good news. We're not going to get the worst of it come August 1st. So much for those fear Mr. Radigan. But I will say that bond yields were higher on the day, and the dollar was weaker, not benefiting from them. And that kind of throws me for a curveball for the sell-off in gold and pullback in silver related to the trade wars potentially coming to an end. I digress, though. We have a lot to cover here in today's show, and we have a new guest, Josh Fabian, who does not come on air all that often, but we had a need, and he raised his hand. So thank you, sir, for joining us in today's session. Dylan, you are the relentless bull around here, though, and you're the only one who's been leaning long stocks. So with that said, what's going right for this market that apparently I was clutching my britches over?
I mean, what's going wrong, I think, is the question. I think the what's going right is that everything the market is afraid of tends to be an illusion. I'm saying specifically with the tariffs and the economy, as evidenced by the earnings, is as strong as ever, and inflation is a basically known at this point. It's priced in. Tariffs are a known discounted item that's going to be less and less relevant as things move forward, and the relative economic strength is high, and the liabilities of the American presidency are being worn in the currency. They're not being worn in the financial markets. So I just don't see why the financial market, the stock market, the equities market doesn't continue to perform.
Josh, this is a market that's going up to new highs here. I'm waiting for those IBM and those Tesla earnings as well. So if anyone sees those having come out, please let me know here. I just said that and they literally just popped up on my screen. So the devil listens sometimes.
Tesla or IBM?
IBM, EPS at 231. So let me just pull this up on the screen here, in fact, before I start talking about it. IBM out here. I would argue that it's looking a little bit soft.
Doesn't look good. Doesn't look good, Dylan, Mr. Optimist.
Let me find some of the deeper numbers here, though, because I want to see these flash across the screen.
I don't care about IBM.
Well, 231 versus 265 expected on the EPS, but Dylan, it's still a company that makes $17 billion a quarter. It's not
I know,
nothing.
but it's not a bellwether for anything. It doesn't indicate anything.
Oh, okay.
Talk to me about Google. Talk to me about Tesla. Talk to me about Meta.
It's not part of the modern economy. I'll grant you it's not part of the zeitgeist anymore. But
all right, so go ahead.
Go ahead, Chris. No, I was going to say that you have the S&P trading at, I believe, about 22 times forward earnings, if I'm not mistaken, which is well above the 10 and 5-year average. So this market is priced for perfection. And I think you saw the ramifications of that last Friday when Netflix came out and, by all accounts, it was a stellar report and the stock sold off by 5%. So I think that, this market was giving you a hint then. It was a little bit frothy. And if you wanted any more evidence of its frothiness, you got back into this meme mania this week with, Kohl's. And yeah, that Kohl's taking off, Krispy Kreme. So I think that this market is starting to get out over its skis, maybe just a little bit, and say what you want about the trade deals that are all of a sudden coming to fruition. We're still, even at 15% on a lot of these deals, still 15% more than what we were at in January. There's inflation that's bubbling beneath the surface. There's structural damage in the job market. We're seeing even the jobs that are being created. If you just peel back the layers a little bit, you're seeing these jobs are in government, they're in education, they're in healthcare. And by healthcare, I mean like home healthcare. It's not innovative jobs. So
sorry,
it's not
Tesla. Let me cut you off there for a quick second. Tesla earnings just came out. EPS misses at 40 cents versus 42 cents expected. Their revenues were still $22.5 billion versus an estimated $22.64 billion. So small misses, but stock trading up here after hours because, again, Dylan, as we've covered here on the show in recent days, this has been so beaten down sentiment-wise. My own personal bias, as long as the company remains a going concern and it's not shutting its doors, it probably has a big discount attached to it, given recent events around Musk et al. Either way, though, Tesla EPS, again, slight miss here. Slight miss, 40 cents versus 42 cents expected, but stock trading higher here after hours right now. Josh, you were saying before I interrupted you.
Just that, you have these macroeconomic issues that, need to be considered. But turning to Tesla really fast, I'm interested in what they have to say. I think the risk here is that this brand has been politicized. And was it the investor disclosure risk or first time investor disclosure risk for SpaceX?
Yes, that came out yesterday.
That they acknowledge that Elon could potentially return to politics, which I've never heard of that before in a disclosure risk for a company. So that really caught my attention. So I think that there's some questions about this company, and let's see what they have to say on their conference call. What he specifically has to say on this call. I think that people want to hear that he's dedicated to this company. Not only that, but also what are the implications going to be for the lost subsidies moving forward?
Sure. Tesla here. I know that we had Mr. Westwater that was still leaning long vis-a-vis the short put spreads in Tesla. Those would be working out well. Dylan, other side of these earnings, obviously we want to hear what Musk and company have to say, but this is a chart that feels like it's coiling and ready to explode. Is this the moment where we see Tesla finally take the baton and help the NASDAQ stretch its legs to new highs?
I mean, maybe. The problem is Tesla's not performing based on its quarter. It's performing based on, the sort of the ever changing perceptions of the future value of the company through the lens of this Muskian empire. And that's an almost impossible thing to price. I mean, for sure it is set up to make a run, but whether it happens right now, I don't know. I do think that it's good. I think the more time that passes between the period of time when Musk is super high profile in the political sense in the Oval Office, just all over everybody's television, and the less public he is and the more he does not exist as a public figure, and the more he just exists as a semi-normal CEO, the better off I think the stock will be. I think that just booking a couple of quarters, I think I mentioned this yesterday, but just putting the half-life of the politicization of the company in the past and allowing the company to become more and more what it is as a company, as opposed to having it be a proxy for Musk's political activities. And so I think just getting the quarter well behind, now getting 2 quarters well behind, I think is very valuable in this context. And so I think that that's actually the most important thing, is just adding time.
Time solves all wounds, as they say.
Mm-hmm.
And getting more time between his stint in the administration and today could be helpful. Certainly from when he left in May, at the start of May, we know that he's going out the door. The share prices are up for what it's worth. So Elon Musk leaving government hasn't been bad for the share prices. But Dylan, it still feels where going into earnings, the stock price wasn't following the rest of the Mag 7 complex. And as bad as the earnings were, they weren't as bad as a lot of people